So we discussed about, what compliance is, then probably the who is responsible within the organization to do business in a compliant manner. Then they went on to discuss about, defining the responsibility of compliance, and came down, what are the responsibilities, identification of risk, quantifying them, then monitoring, then thereafter, finding solutions, escalation, and all that. So then I think we went on to discuss how this system works within the organization, right? So how the policies are created, how is that the board gets involved in the process, all that we discuss, I think, right? The mechanism, having the policies, having processes to run the policies, and probably I think we discuss about the JD, the job description, what are the things that you need to capture in it. Then came down the role of compliance, yes, the appointment of the compliance officer, how regulatory, how compelled are banks to appoint compliance officers, like that we discuss. Okay. So as per you all, I think I made a note, I have lost it. I can't remember exactly up to which point we came up. But as per the audience, we have discussed the slide number 14 as well, right? So you all can see slide number 14 on the screen, right? Okay, right. And you all were provided with this handout before, no?
Yes.
Right. Okay. Right. Now, slide number 15, the compliance officer responsibilities. We are continuing to assist in the development of an effective internal compliance culture. Right. Now, these are there are a lot in this small sentence: to assist in the development of an effective internal compliance culture. Right. Now, how do you do that? How do you assist to develop an effective internal compliance culture? It is a one simple sentence, but it carries a very huge, area, or other task that needs to be performed by compliance in order to develop an effective compliance culture. Right. So I would like to get involved in a bit of a discussion with the audience. So you all can unmute your mics. I don't think we have large numbers participating in this session. So having your mics unmuted will not make a disturbance. What do you think the role of compliance in assisting or developing an effective internal compliance culture within the organization? Just tell what you feel. Yeah. Can somebody give it a try? Yeah, it's okay. It's okay. I mean, there's nothing wrong. There's no one perfect answer, especially those who are in compliance can make an attempt.
It is overall, it will reduce the risk on the institution in
Yeah,
various way.
yeah,
From the FIU, from, for example, penalties from FIU, and then other regulatory action, and then there is a prevention from using people unethically in the bank products channels and those things. We can prevent if there's a compliance process in place and in place.
yeah. So okay, it's a good attempt. May I know who spoke now?
Yes. Was a Mano.
All right.
Mano from
I just guessed from the voice. Right, Mano. So any others who can make an attempt there, please? Let this be a discussion. I mean, though we are having this technical, difficulties and then the limitations, if you do this, I think we can make the session more lively. Any other person, at least one?
So this is Darshana.
Yes, Darshana,
Uh,
please speak up.
Compliance department has to give the guidance to other departments to be complied with the regulations and make sure that they are complying with it.
Okay, good, good. Okay, so both answers gave lots of insights into this. So putting everything together, now remember the if you had followed my sessions in the last Sunday or the Sunday before last, we identified the connectivity and we identified who is sitting on top and responsible for the for doing business within the organization, that is the board of directors. Then we very clearly identify how it is connected and what is the internal chemistry within the organization for the board of directors to make sure that the business is run in a compliant manner. Then we identified having policies, then getting the policies framed, then compliance probably assisting or guiding them. The main focus is when you are having a policy, you have to always keep it in mind that the policy is made keeping in line with an external requirement, which can be by way of a regulation, by way of a direction, by way of an act passed by the parliament, or it can be by way of combination of all these things, or it can even be certain the industry best practices like Basel and all that. So based on these certain concepts that govern the industry of banking, or that shows the way for doing business in a better way, so you need to frame your policies, right? So when the policies are framed, then it is approved by the board. The compliance is the conduit between the board and the management, or I would say the business, right? So they are sitting in between, right? Now you might get a question like this. Now in this type of a, that's what I say it's important to make notes in this program, because it's not a it's a diploma program, so it's not a question where you are getting a straightforward answer to be provided by reading a note. I don't think when we are making our the objectives achieved, right? So if there's a question, there can be a simple question, right? How do you assist in developing an effective internal compliance culture within the organization? As if you are the compliance officer, then you got to give a wide spectrum of your knowledge experience to satisfy the examiner that you know how you would perform as the compliance officer in developing this. So there's no one straightforward answer where you can find by going through the note straight away. You can gather information from the note, you can gather point from the note on the discussion, and then you will have to submit, because end of the day, it is this knowledge or the application of knowledge, or putting your skills into practice is what matters in creating an actual compliance culture within the organization. So the final objective of these programs, not only this program, any program of this nature, is to make sure that you put out a very comprehensive, robust product to the industry, so that the business can be done in a more professional and effective manner. So that's why I'm taking time in guiding you all and giving you these insights, right? It is simply, please do understand, you might get through if it's a kind of a parrot-like answering system where you read the note, come and put everything on paper. I don't think you will put out a good quality product to the industry. What is needed, especially in this program, is how you are applying your knowledge and the basics into practice, right? That's why I'm insisting this discussion. So, to assist in the development of an effective compliance culture, that is the responsibility of the compliance. So your answer has to be something like that, that starting from the top-down approach, and the fact that you are the conduit between the board and the staff or the management, and then you have a role to bring them together, harmonize the growth objectives with that of the regulatory objectives, right? And how you would buy the people in to do business in a compliant manner, how you can explain the benefits of doing business in a compliant manner, the other side of it, what are the implications if you don't do business in a compliant manner. So all these factors needs to be put into this question, if that is the question, right? So I'm just opening out your minds to think, very comprehensively, and to train you in such a way that especially the compliance community who are sitting in this class, and also the students from different other sectors, and then the business lines or the operational sides within the bank, but why they have selected this program is definitely they have an interest to know what compliance is and how to do compliance. So in that sense, I'm trying to train you all to give that insights as to how you would go and practically put this into practice. So your answer has to be that. So this is just a simple sentence here: to assist in the development of an effective internal compliance culture. So it needs to run in the back of your mind what you should do and how you would, promote or rather convey the regulatory requirements to the business. All this is important, and how you would interpret the regulation, because that's important, right? So having said that, we will move on to the next step. All these things will come into play when you are supposed to answer a question like that. In real life, you are not going to answer questions when you get back to your working desk or your desk office or the cubicles or whatever it is. It is the knowledge that you have which you would blend in the right proportions and put into practice, right? So the maintain relationship with the regulator, including the coordination of responses. Now, this is another important area. How do you maintain relationship with the regulator, right? Now, regulator is regulator. I mean, if you have gone through Mr. Rupa Singha's sessions, I believe he would have given you an insight as to the powers of the regulator. At least one particular segment of the regulator, the FIU. Similarly, the regulator has lots of powers to control and regulate the industry. So when you are dealing with the regulator, you need to understand the purpose of your business being regulated, A. Then the benefits of doing business in the regulated manner. Implications of not doing business in the regulated manner or in a compliant manner. And the powers of the regulator. If you don't do, what are going to be the consequences here, right? So all that should come and run in the back of your mind when you are talking about maintaining the relationship with the regulator, right? So you as the compliance officer has a duty and responsibility towards your bank. I mean, there's absolutely no question. But you have a regulatory responsibility towards the regulator as well. Why do I say that? You have to bring certain things to the notice of the regulator, right? And you have to support the regulator. You have to coordinate with the regulator. All this counts a lot in defining your relationship with the regulator, how you are maintaining your relationship with the regulator. So it has to be a cordial but a professional relationship that you need to develop with the regulator. And you have to always remember that the regulator is there is not a kind of a problem or an hindrance to do business, but the regulator is there because the regulation of the industry is a must in the environment of, especially in the banking and the financial sector. So if you have that in mind, you would understand more than anybody else within the organization the importance of the regulation, the importance of the regulator. Therefore, you would maintain very strong relationship, professional, I would insist, professional but cordial relationship with them. How can you do that? You need to understand exactly the requirement of the regulator, right? And then support it. So regulator will tell you to do business in such a way that you need to understand the underlying concept as to why the regulator is asking you to do business in that manner. That has to be understood by you. When you understand that, you do it with some meaning behind it, understanding the concept, understanding the pluses, understanding the minuses if not done. Then you would do it very effectively, right? So it applies to anything that you do. It's good to do things understanding as to why it is to be done in this way. Then only you can even improve and develop. If you do not know, because in the banking industry, I think you would know, right? There are certain things that you need to do in such a way, right? But I have seen in, many occasions where people just do things for sake of doing, just because the predecessor has instructed to do it that way, just because that he has seen that is the practice, doing it that way, right? They do without understanding the reason as to why it is to be done in that manner. That is very important. Anything you do, I'm requesting you to open up your mind and train you. Try to understand as to why it is to be done this way. Then, if you understand that, then you can even come up with better solutions, better processes, better ways of doing it. If you understand that, if you don't understand it, then just do it for sake of doing, right? For instance, now this is all the say you want to do. You have been asked to take KYC. Take KYC. Why should you take KYC? I want somebody to answer. One or two or many. That's okay, no problem. Let's make it very productive and beneficial for all the participants. Why do you need to take KYC? There can be many reasons. Name few, please. In the interest of time, I think you need to act or respond very fast. Because I don't see your faces. I wait till you respond.
To get the background of the customer.
Okay, to get the background of the customer. Why should you get the background of the customer? Either you or anybody else can answer. Please do take part in this conversation.
Prevent frauds and
Sorry?
frauds.
Because we have to get the assurance that whether that particular person can afford to pay whatever he's taking facility.
You need
Because
to
we
get
don't know
assurance as to what?
whether he has the credit worthiness to pay. Like
Okay, that is in respect of credit. Yes, you are right. But in general, when you open an account, you are supposed to take KYC. Why do you need to take KYC?
Because we need to understand who is our customer, and we need to assess and identify the risk associated with that customer, and thereby we can carry out ongoing due diligence. What are the risks
very
that
good.
the bank may expose?
Okay, good. Right. So, primarily, we need to take KYC in order to fulfill a regulatory requirement. Because if you go by the law passed by the parliament, the PMLA 5 of 2006 or the FTRA 6 of 2006, both these and including the Convention on Suppression of Financing of Terrorism, the previous act, passed in 2005, make certain requirements for you to comply with. And the FIU has issued, guidelines, minimum rules and regulations in order to take KYC. So you have to take KYC. That is one side of it, right? Then leaving all that aside, I think somebody mentioned, you need to understand the customer. You're going to do business with the customer. If you don't have KYC, KYC is everything basically. The name, address, the source of income, what is the type of business that he does, the level of transactions, the other business sources, all that. It's a comprehensive set of information about the customer to understand, right? So I'm just asking you the question. Just leave out everything from a regulatory point of view. Isn't it important that you should take KYC? We'll just assume that the regulator moves and removes every requirement to take KYC. But shouldn't you take KYC still? My view is yes, you have to take, because you are going to do business, right? So think in that line. If you are to do business with a customer, you need to understand who he is, what are his businesses, what is the level of business, what's the type of business, what are the products, whether he's into manufacturing, trading, importing, exporting. It can be various. It can be investment, right? Then only you know what you can offer. Because in the banks, I think we boast ourselves saying, okay, we are having X number of products, right? 100 products in our shelf to be offered to customers. We are a banking supermarket. These are the terminology that we always use, right? But how do you expect the customer to come and ask for product A, B, C, or D? Customer will not know, because will you know? As bankers, although we go and boast, we have 100 products to be offered, very well tailor-made, customized product to be offered to our customers. Sometimes even the product development is asked how many products you have. Probably they themselves are not very sure of how many products are there in your bank to be offered to customers. Because there are so much of products, and the products come day in, day out. Because that if it's a KPI, there will be more and more product coming in. So, okay, it's good to have products, but then you need to know the features of the product and the wants of the customer to sell the product. So that is a requirement, right? So if you don't know your customer, and if you don't know, you probably will not know what his needs are. You probably will not know what are his requirements. You probably will not know what product suits him best for this particular purpose. So you need to know that, right? So if you know that, you can offer him the right product to suit the customer. In my experience, I think there are customers, sometimes, they just know the popular most products in the bank. What is the popular most product in a bank? Generally, the most popular. The most popular product in terms of credit.
Boss.
Huh? Yes?
Credit card.
TOD.
TOD.
TOD. OD or TOD, right? Can I open an account? Can we get a OD? This is the general question the customer is asking, right? Okay. So some people come and say, I need an overdraft. Why? I want to buy a vehicle. Is overdraft meant to purchase vehicles? No, totally out. If you give a temporary overdraft to buy a vehicle, then you are gone, right? So the customer may not know. Customer will know only few selected products or popular most products within the organization. So, but if you know who the customer is, you can offer him the right product. It can be leasing, or it can be maybe a personal loan, or maybe a term loan, or some working capital loan, if it is can be connected, the requirement of the vehicle is connected with, something to do with this business. So it depends, right? So then only you can give him the right product, offer him the right product, and guide him the right way to do his business. Otherwise, it's going to be total funeral at the end of the day. You grant him a TOD to go and buy a vehicle, you are gone, right? So then customer is destroyed, you are also destroyed, right? So my contention is taking KYC is a regulatory requirement, plus it is a requirement, a business requirement as well, right? So when you are dealing with this in this scenario, right? So you need to understand, that's why I'm asking you, please try and understand why it is done this way. Right? If you had made this query from you, within you, you would tend to think and find out why we are taking this. Right? Now the example that I took, the KYC, if you ask this question and if you had recognized and realized the importance of taking KYC, then you can convey it down the line. I mean, now of course things are somewhat better, but when this KYC was introduced, it was a huge problem, right? It was a huge issue. Taking KYC, it was always brought in as reasons to not to do business. Why? Why the targets could not be made? Because the customers are not willing to provide KYC. I think I have heard this many a times. Right? It was a scenario running across the industry. Now, of course, things have changed. Right? But those who had been in business, say, a decade or 1.5 decades before, 15 to 20 years, would understand this. This is a huge issue. Right? This bank is asking for this number of KYC. Our bank is asking for 10, 15, more KYC. So customers are not willing to give. So this kind of situation, but you are the compliance. You need to make sure that you take KYC. How you can do that is by conveying the benefit of that to your business people or the frontliners or the process owners and buy them in to do business in a compliant manner by showing them the benefits, by showing them and making them realize the implications or the downside of it if it's not done. Right. So when you are maintaining the relationships with the regulator, I was talking about the multiple roles you are going to play. One is you are reporting to your bank and your pay is paid by the remuneration paid by the bank. At the same time, you have a duty towards the regulator also. So you understand why the regulator is there, in order to make sure the sustainability of business, doing business the proper way to safeguard the interests of the customer, to safeguard the customer from the moral hazard issues. The business is maintained in such a way that the sustainability is ensured. The capital requirements are met, the liquidity requirements are met, the credit requirements are met, the provisioning is done properly, the reportings are done properly, disclosures are done properly. All this is important to do business in a transparent manner, right? So when you are maintaining the relationship with the regulator, all these things should work in the back of your mind, right? Why am I supporting the regulator? If you as the compliance officers think, okay, the regulator is a menace and then there's a problem, my God, why is that on earth that these people are there? It's hindrance to do business, everything will go for a 6. But think loudly, think comprehensively, think deeply, and then you will get to know and you will realize by yourself the importance of having that relationship. So coming back to the point, it's important that you maintain very cordial but professional relationship with the regulator. So if a question comes like that, probably you have to answer in this manner. Giving information, telling about your understanding about it. Right? So I'm training and guiding you to make sure that you go out as a diploma holder with a good frame of mind or comprehensive, robust frame of mind, so that you would do your compliance function in such a way that it will help the bank, help the regulator, help everybody, and that make sure that your business is run in a compliant manner. Okay. So there's another section coming down in our discussion points, how to prepare, how to do as a compliance officer for a regulatory inspection. So that then we can discuss in detail. But for the time being, the relationship that you need to maintain with the regulator has to be professional, cordial, including coordination of responses. What is that? Coordination of responses. The regulator wants information from the bank at different points, at different levels, and every now and then. So you need to coordinate it because mostly their requests do come through compliance, right? So then you need to make sure that you may not be the person who provides that information, but you need to make sure that the person who is supposed to provide that information in a timely manner, in an efficient manner, and an accurate manner. That's your responsibility, right? So the compliance role is not an easy role. It's very difficult task. Please do understand it. Because you can't simply pass it on to say, okay, provide this information. Some information will go, some information may not go also at times. So when the moment a request comes and routed through you, you need to make sure that A, it is passed down to the person or to the division or to the head of business or whatever it is, in order to comply and provide such information to the regulator. Then you need to follow it up. How do you follow it up? You follow up, ideally, you need to keep them reminding. And on the due date, you need to ensure that the report is submitted. Once it is submitted, or on submission, you need to make sure that the bank has taken adequate precautions, right? And done due diligence in order to provide accurate information. That's very important, right? If the information provided by the bank is not accurate, then it's going to create problems all over. It can be for various decision making, right? If some certain economic information is required and if you give some crooked information, the macro level decision making will totally be disturbed. See the implications. Then you need to make sure that the information provided in time and in an accurate and efficient manner. How do you do this? Are you supposed to go and check each and everything? There are certain things you need to do also. My compliance, the people will agree, those who are in compliance, right? But at least you have to make sure, go on the standard basic principles. Everything within the bank or within any financial industry organization, there has to be responsibilities and accountabilities very well casted and framed. So any function or any process, you need to have the process established and framed in such a way that you would know who is responsible to do this, who is accountable if it is not done. There can't be any gray areas. That is how you can create the compliance culture, right? So if it is something to do with finance, who is responsible for providing the finance information? Who is responsible? Maybe the CFO, or maybe the chief accountant, or some authorized officer for the finance department. But you have to make sure that it goes with the relevant authority, right? Now, if the information wanted, and if it is sent by the junior most officer within the organization, that without being, screened and scrutinized by some senior officer, there's some problem. Then the compliance need to chip in there. And make sure that there are people who are taking responsibility for that information. It can be on a commission or an omission. What shouldn't be done is done, right? Then who is responsible for that being done? So this concept is important in doing business in a compliant manner. There has to be responsibilities and accountabilities very well framed and casted within the organization, covering all aspects, right? Now, then you will have those relationships with the regulator to contribute to and attend to meetings. We are moving to the next point of industry bodies of which the firm is a member. Right. What does this mean? If you are a member, example, the Compliance Association of Compliance Officers of Banks, it's an industry body that has been framed to bring uniformity among banks in complying with regulations, to talk to the regulator in one voice representing the entire organization, the industry of the banking industry, right? To discuss the problems, to respond to various consultative papers. So that type of forums are there, right? So the compliance officers has a job role or responsibility to contribute to and to attend such meetings of industry bodies. That was one example I took, the Compliance Officer Association. It can be the Forex Association, right? It can be the SLBA, Sri Lanka Bankers Association, right? Sometimes you may have to go and represent. It can be, certain technical committees. But if something to do with the bank and you are required, then you need to go. But if by virtue of your office, you need to be a member of the Compliance Association and go and attend those meetings. When I say you, I'm referring to the Compliance Division. Probably the head or a designated officer will go. So we are talking in those lines. So that's going to be a responsibility of compliance to go and take part in such meetings and all that. Right. Then the skills required by an effective compliance officer. Skills required. So for you to function as a compliance officer, it can be the compliance officer or it can be a next level officer in the compliance, right? You need to have certain skills. Why? The role of CEO, compliance officer, is very complex. Thus required both varied and specialized skills and competencies to meet the demands of the position. CEO should have a sound understanding of the objectives, principles, and the management of compliance. CEO should have knowledge on regulatory requirements and compliance of same. CEO should be able to influence the key stakeholders towards meeting compliance and these things. Right. So some of these things we have already discussed. We just take point by point. Compliance role is very complex. That's exactly what I mentioned. This is what the textbook says also. Because it's the reality. It's a very complex, a very difficult task if you have to perform it properly. Because remember, you are in between. You are in between. So you need to, from one side, support your business, the growth objectives, the development of the bank, meeting targets. That's from one side. You are responsible to assist the process owners, the business frontliners, the marketeers, the strategy people who frame strategies for the bank in order to achieve. So that's your responsibility from one side. Other side, you are responsible to the regulator to make sure that your business is run in the regulated manner. It's very difficult thing to balance this. There's a balancing act. So if I put it this way, it is the balancing act. Compliance is a balancing act between the growth objectives of the bank and that of the regulatory requirement. Right? So it's a balancing act. So the compliance has to be always complementary and supplementary to do business. If due to compliance, if the business is going to be hampered or hurdled or made difficult, then of course there won't be, you will not exist there for long. Because the banks are there to make profits primarily, to improve, enhance the value of the shareholder. So you need to meet your growth objectives. You need to meet your bottom line. You need to meet your top line, right? You meeting the top line and meeting the bottom line, growing the balance sheet. All these are the requirements. Fall in line with the strategy of the bank, short term, medium term, and long term. You got to be supportive. You got to support the human resource development, the capital, because you are one of the hubs within the bank, right? So that's why it is complex. At the same time, you need to make sure the business is run in a compliant manner, keeping in line with the regulatory requirements. So that's why it is complex. That is exactly why you need to have certain very specialized skills and competencies to do this. If you don't have those skills and the competencies, definitely you are not going to perform properly. There are going to be issues. So let's try and understand what these skills and competencies that should be possessed by the compliance officer. CEO compliance officer should have sound understanding of the objectives, principles, and the management of compliance, which we are learning. If you are the compliance officer, if you are a part of your compliance team, obviously you need to understand, have not a general understanding, a sound understanding. Go back to the example that I brought in last week or week before the last lecture. You have to be that's my definition, be a consultant physician. I underline the word consultant physician. Any ordinary MBBS doctor is a physician, medical officer. No, you need to be a consultant physician. Because you need to have specialty in the entire human body, how this thing works. You need to have certain specialized knowledge on the heart problem. You need to have specialized knowledge on your maybe the brain issues, the skin issues, right? The chest issues, the maybe some knowledge, specialized knowledge on the VOG related matters, kidney issues, but not to the extent of a particular specialist in that particular area. He can be an expert. Now you take a cardiac surgeon, he's an expert on cardiac surgeon. Not a, specialist, specializing on the heart surgery, specializing on brain surgery. But a consultant physician will have a knowledge of the entire human body, but specialist knowledge. So the compliance officer has to be somebody like that, who should have specialist knowledge on the entire business. Then you can do business in a you can do compliance in an effective manner, right? If you don't understand business, sometimes there can be big issues in trying to getting the business to do things in a compliant manner, right? So that's why you need to have specialized knowledge, right? So basically, before going to the specialized knowledge on the business, you need to have sound understanding of the objectives of compliance, the principles and management of compliance, which we are learning now, right? Then the sound knowledge on regulatory requirements and compliance are same. So you as the compliance officer need to have a sound, robust knowledge on the regulatory requirements, right? You have to have a clear idea as to how this business is regulated, right? There are many regulations. Every day, like there are regulations coming in, amending the previous ones, repealing the previous regulations, issuing new directions. So you got to be in touch with all this if you have to do compliance effectively. That's a must. So you need to understand and have a sound knowledge on the regulatory requirements, right? The and the importance of doing the business in a compliant manner. How you can do business falling in line with those regulatory requirements. That's a specialized knowledge, right? Then CEO should be able to influence the key stakeholders towards meeting compliance and regulatory requirements. That's another important thing. The compliance officer, that is why the regulator always insists the compliance officer has to be a senior officer within the bank. As a member of the corporate management team, by virtue of that position, that you are always being heard by the others, right? So, CEO should be able to influence the key stakeholders. Who are the key stakeholders within the bank? The leadership team, the managing director, CEO, the COO, or maybe the heads of business, the divisional heads, right? Sometimes even the board of directors, right? So the compliance officer needs to be a person who can influence the key stakeholders on what? Towards meeting compliance and regulatory requirements. Towards meeting compliance and regulatory requirements. If the bank is going in the wrong direction or not following the regulations properly, you should be able to influence them by telling them the pluses and minuses, the consequences of not doing it that way, and influence the decision makers to do business in a compliant manner. Right? Is it an easy task? I doubt. It's not an easy task. In order to do that, you have to possess certain personal skills. Like you need to be very fluent in your spoken English language. Leave the language, English or Sinhala. You need to be very fluent in presentation skills, both oral and written. Right? Then only you can influence somebody in a official and a forum and a professional meeting or a gathering. Then you need to have your writing skills. You need to be a good listener. You need to have your intelligence to understand something very fast and put across to the rest of the people, the key stakeholders, to take a call on it. Right? So the compliance has to be, should be able to influence the key stakeholders toward meeting compliance requirements. Then continuing. CEO should be able to take his place along with the top management of the organization with a direct reporting line to board. That's why they are insisting the compliance officer has to be a senior member, ideally in the corporate management. He should be able to sit alongside with the leadership team, right? And with a direct reporting line to the board of directors, which is a must. It's a regular requirement as per the governance regulations of this country. The compliance officer's direct reporting line is to the board integrated risk management committee chair. That is because that independence needs to be given to compliance. If independence is not being given to compliance and the compliance is going to go and report through the CEO or COO, that's a problem. Right? At the same time, you need to understand, you have a direct reporting line to board. Doesn't mean that you should go and report the back end reporting to the board without bringing it to the notice of the CEO, the COO, or your management. Can somebody tell me why? Because from one side you say you have independence, you have a direct reporting line to the board of directors. At the same time, I'm saying as a practicing compliance officer or who has been practicing, you need to do it. You should not be doing it the back of the management. What is the reason? Now, these are the finer points that we need to understand. Why? What is the reason? Can somebody answer?
To assist business growth.
Yes.
So with that keeping in mind, we should escalate to the line management and get update them. Then later, if that is not resolved, then only we have to take it to the integrated risk management committee.
Okay. What's your name and which bank are you representing?
Tiliban from Panisha Bank.
Yes. Any others to comment? Thanks, Dileepan, for your comment. Any others? Think, open out. There's nothing wrong. We are in a classroom, a virtual classroom. So there's nothing called wrong answer. These are like, higher level discussions we are taking, a professional discussion. So we can see. Everybody can add to this. So don't be shy. Every answer can be good as somebody else's. So everyone's comment is going to add flavor to this, so you will understand it better. Any others? Yeah, please come up. Nobody? Simple logic.
So if there is an issue, it's the management who should resolve that. So therefore, with the cordial relationship we have the management, I think it's the first has to be reported to the management.
Yeah, good. What's your name?
Randilu from Asset Line DC.
All right. Yeah, a good answer. Reason is this. You have to, what is the ultimatum or the idea of identification of an issue in order to resolve it. Correct? You have to identify issue. You have to identify risk. It can be compliance risk or any other risk within the organization. Right? You have a direct reporting line to board. That's fine. That is there. It's independent. Nobody can stop you and going and reporting. Technically, nobody can stop because you have a reporting line to direct to the board. But my question was, you should not be doing it through the back door. It has to be done the proper way, unless it's a fraud or something, right? Those are exceptional situations. The simple reason is, if there's an issue, or if there's a deviation, or if there's a violation, or if there's an area that needs to be improved, probably you have to bring it to the notice of the BIRMC is fine. Through BIRMC, probably to the board, depending on the severity of the issue or the complexity of the issue or whatever it is, the consequences that can bring into the bank if not done properly. All that can be decided. But the moment you identify the issue, you need to, what's the next step? Is to resolve it, to bridge the gap, to fill the gap. Who can do that? It is the business who can do that. It is the process owner who can do that. It is the management who can do that, definitely not the board of directors. Right? So when you have an issue, then you need to bring it to the notice of the party concerned and buy them in and explain them the requirement, explain them the issue, explain them the gap, and tell them the consequences of it if not done properly, and buy them in and help them and assist them. Remember, assisting the development of compliance culture within the organization. That's the role. That is the role. Right? So you have to bring it to the notice of these parties concerned and tell them and get them to do the resolution of the issue. You have to resolve the issue through them. And at the same time, you can go and report it if the issue is identified and resolved, and if it merits a reporting, you can still report and say since rectified. since rectified. Because the board is not interested in identifying or knowing only the issue. Remember this. For that matter, not only the board, if you are in the top management, the senior management, they don't want the person to just come and convey issues. They want somebody who can resolve it, who can assist in resolving it, who can be a supporting role in resolving the issue. That is we call the positive thinking management. You come up with the issue, ideally with a solution as well, coupled to it. Coming up, there's an issue, but I propose this solution to resolve this. Right? That has to be the approach. That is how you can be a good, effective compliance officer. Right? If you just do, okay, reporting, everything, this is wrong, that is wrong, this is wrong, okay, fine. If it's wrong, what should you do, or what the bank should do in order to resolve that, in order to solve the problem? That is the approach. Right? So, that is why you need to have the skill. That is why you need to have that understanding of the business also. I'm going back to my basics, the drawing board. Right? You have to have some, sound knowledge of any operation within the organization. It can be opening of accounts, starting from onboarding of customers, doing business, the branch operations, then it can be the credit lines, the credit operations, the evaluation of credit. If the compliance knows that part, it's very easy to run the job. Because there's nothing that then somebody can come and bluff you. Right? So if you have that opportunity, that's fine. But if you don't have, still it's good to learn those. How to make provisioning. Are we making the provisioning properly? Are we giving now these days moratoriums are all around the country, right? And getting extended. Are they being done properly? Have we followed the central bank moratorium guidelines? Are we doing our impairment properly? Are we having our recovery policies properly? All this is important. Right? So you need to have this knowledge. Compliance is not the job that you can sit in one place and, be happy and pass it. You are not just a postmaster, dumping and what is coming from there, you just pass it down, please comply. It won't happen. It will never happen, I can tell you. Right? I know some banks, they just put the same circular down the line, please comply. I don't think it's a good approach because some of the circular instructions need to be interpreted. Right? So you have to support it. When you get a new circular, when you get a new direction, you need to first go through. You have to immediately pass it down to the right person concerned so that they will also have first-hand information right at the beginning of the process. Then you have to go through. Either by yourself or in conjunction with or in liaison with the department or the process concerned, go through the direction and identify, are there any gaps? Ideally, there will be gaps because the direction is there to tell you something to do in a particular way. So you need to understand the provisions of the direction and make sure that to map it with your existing processes, the existing the ways of doing it, and to see what gaps are there in meeting the new regulation, new requirement, new direction. Each point you need to do a gap analysis. Right? And then liaise with the process owner or the business owner or whoever the running party concerned in order to bridge these gaps. Right? Then you got to capture it in your compliance reports. I will touch on it when you are talking about that. And then present it to the board of directors. Look here, every new direction, I think that has to go to the board through the board BIRMC. The new directions issued. And this gap report must go to the BIRMC as a practice to tell the board, this is the new requirement and this is where we are. Therefore, this is the gap. And this is what we are doing in order to bridge the gap. That is what is required by the board. Board is not interested in getting a report from you to say, okay, this is the new direction and I have passed it down to the party concerned. What can the board do about it? There's nothing or little that the board can do about it. So the board needs to be told, yes, there's a new direction, this is the date, this is the area, and these are the requirements, and these are the gaps that we have at the moment. Mostly the directions are issued to comply with immediate effect. So that means there are gaps. Then every action needs to be taken in order to bridge those gaps as quickly as possible, as a matter of priority, because it's taking effect with immediate effect, immediately taking effect. So there's a gap. There's a regulatory deviation or a breach then. Then you need to tell the board, look here, this is the way, these are the gaps, and this is what we are doing. So this has been passed on to say something to do with, say, the impairment or credit or moratorium, or it can be some treasury or exchange control or whatever it is, right? So these are the gaps that we have identified, or a customer chart, or it can be anything, right? Deposit insurance, it can be anything. So then you say, okay, this is the area, this is the requirement, this is the gap, and this is what we are doing. Until the gap is fully resolved, this report needs to be submitted. Every month, the report goes to the board. But until and unless it's fully resolved, you don't take things out, it will go as a recurring item in that report. And you have to give the comfort to the board that action is in place to resolve, because certain things cannot be resolved immediately. A direction might come. And some time back, there were directions and then at least some regulatory requirements to introduce to cover the cyber security, to bring the PAM solution, privilege access management solution to the company. I mean, it's something that you cannot do immediately. But the moment it comes, you need to take it on board and discuss with IT to see, do we have a PAM solution? Have we installed? It's going to take definitely a couple of months, so sometimes a year to resolve. Then you need to identify, find the gaps, and then probably tell the board there's a requirement, and still there's a gap here, and we are working on it. Who is responsible in carrying on that project? Is the CIO or somebody else, or there's another team supporting him, right? The information goes, and there should be any surprises to the board from the regulator to come back and say, you all have not fulfilled this requirement, right? You need to avoid surprises at every corner, especially the regulatory surprises at every corner, right? So that's your job, bro. In order to do that, the skills you need to have. Firstly, I think you need to have a very analytical mindset. Analyze things. You need to, have the ability to foresee what's going to happen next. To be proactive. Understand? So you need to know the moment you see the regulation, you need to know, okay, what is this? Do we have this system? You will immediately just dial up the CIO and ask, do we have this? No. Then what do? Can we fix it with our existing systems? They will say yes or no. If no, then how long will it take? Then you need to know this. It's not only the problem of the CIO or the management, it's your problem. It becomes your problem. Thereafter, on that particular example that I asked, right? Then sanction screening. There can be a new list that's introduced, like FATCA. All of a sudden it came and landed on us a couple of years ago, 6, 7 years ago, right? It was an extremely difficult thing to comply, right? It came and landed on you, some, extraterritorial requirement, US requirement, but still it became a regulatory thing on us on certain reasons, where the simple reason that we are using the US as our hard currency, then we had to comply. But then it was a journey to comply. The compliance need to be in the middle of the question. Take it the bull by the horns and assist the department. Go back to that word assist in developing the compliance culture. That is the assistance that you can provide. It's not a mere passing it on to them and say, okay, the factor has come, so just comply with it. How you are going to comply is not my problem and it's your problem. No, nothing will happen. Nobody will take interest of that if you don't tell the consequences. You have to tell the consequences. If you don't follow, if you don't comply with the FATCA regulations, then you are, there's a chance that your nostril balances can get frozen. You might not be able to do your international transactions. Your foreign trade will come to a standstill. Your settlements will come to a standstill. Foreign settlements. So you need to know. That's what I'm connecting things. You need to have some specialist knowledge on those areas. What are the consequences? If this is not met, what would be the repercussions? We will have problems in doing our trade, foreign trade. We will have problems in maintaining our correspondent banking relationship. We might face sanctions. We might, levy and slap penalties on us. So this, if you don't have that knowledge on that subject, probably you will not understand it. You will not know this because the regulation will not tell. If this is not done, this will happen. Rarely it tells like that. Regulation will come, but the consequences you should know. If you don't do this, what are the risks? That's the identification of risk and measurement of the risk. What is the measurement? How much this risk is going to affect us? How severe it's going to be? Is it just going to be a mild one or a mediocre one or with a high one or a very high one or catastrophic? That you need to know. How will it affect you? So for that, you need to know the business. You need to have that analytical mind. Knowing the business alone will not help you. You need to have an analytical mind. You need to go through. You need to foresee what's going to happen next, coupling the circumstance factors and what you know about it. So that's why I say the compliance job is not easy. It's a very complex job, right? So CEO should able to take place along with the top management. Because if you are not recognized within the organization, don't have that the required level of seniority and the acceptance within the organization, it can be a difficult task for you to go and influence and sit along with the top management. It can be a totally different way that you are wanting the bank to do business now. But if you don't have that skill of presenting, skill of winning the hearts, the minds of the people, you might not be able to produce it, right? So with a direct reporting line. Then CEO should possess strong interpersonal, exceptional communication skills, both oral and written. I think we discussed this. So without you having the oral and written specialized skills and making your presentations, making your voices felt and understood by the others, influencing their mindset to do things in different way, then you are going to fall by the wayside. So you must have those strong interpersonal skills, exceptional interpersonal skills. CEO should have effective listening skills. I think I mentioned you have to be a good listener. You need to understand the other side of the problem, to listen, right? Listening is a very difficult thing, right? You need to be a good listener as well, which needs to ensure proper understanding of the issues requirements. Then only you can understand the issues and the requirements of the business or the other side. Otherwise, you'll just go one-sided, right? So these are the skills the compliance officer should have, right? We'll move on. CEO should have the business awareness and the pragmatism. Business awareness. You need to know your business, the environment in which you do your business, right? You've got to be pragmatic, putting things in the right proportion, the right way. and understand it properly, right? So awareness of business and pragmatism is extremely important, right? So that's why I say you got to be once again, going back to my drawing board, consultant physician, understand business. Why this business is done this? You need to know a little bit of credit, not little bit. The good that you know your credit also, the importance of doing credit, how you are providing, right? If the what are the provisioning requirements? Now the IFRS 9 or LKS 39 was replaced, taking the IFRS 9 requirements, right? The impairment has come in based on the probability of default, moving out from the bucketing system, right? So these are the new requirements. When I say new, relatively new, but it has been there for some time. So what are the implications? If a facility turns bad and goes beyond 30 days, it will fall into the basket number 2, stage 2 of impairment, right? Goes beyond then the 60 days, it goes and then you got to provide for the entire capital, right? So you have to impair this. So this knowledge has to be there in the compliance. If they don't understand what you mean by impairment, what is IFRS 9, what is FATCA, right? Then you can't do compliance in a proper way. You need to understand, the new trends in the business, the capital market, right? Though may not be happening very frequently and day in, day out, but these requirements are there, the cash management, right? The digital banking. Okay, so compliance needs to understand this. Then above two skills have a material impact on the credibility of CEO, the level of respect and thereby acceptance at the senior management level, right? I would add to this point, not only at the senior management level, at every level. Go back to your working environment. See how you are accepted within the organization. Are you accepted as a knowledgeable person? Right? Otherwise, they'll say, okay, compliance will tell they don't know, they must know how to do this. If that is the kind of thinking of the people, then you're halfway, your battle is lost. But if the business people are aware that this guy knows the subject, he knows the game, he understands it, and he is able to provide solutions for it, then you get the acceptance from the people. You got to buy them in. You will be accepted and recognized by the people who knows the subject, knows your onions. Otherwise, everybody can come and say, don't do this, don't do that, don't do this. If you say don't do this, you must say how to do it. Right? That's the way that you need to tell business. Remember, your job is to harmonize the growth objectives with that of the regulatory requirement. You can't do it at one expense. One expense at the one side, right? Because you might have a fully compliant, 100% compliant bank. As a result, your revenues are dropping, your business opportunities are losing, you are losing the customer confidence, but perfect compliant, 100% compliant. Is it a right proportion? Is it a good way to do business? Can I have an answer? Can I have an answer, please? Are you all with me? You will have 100% compliant bank, everything done, tick box, everything is done. Everybody is doing perfectly, right? But on the other side, you are losing business, you are losing your customer base, the number of customers, you are losing your loan book, your NPAs are rising, your strategies are falling by the wayside, right? Losing your business to competitors, top line is dropping, bottom line is dropping, NPAs are rising, but you are very compliant. Is it the right proportion? Yes or no?
No, sir. No.
Yes or no?
No.
I still didn't hear you. Yes or no?
The answer is no.
Huh?
The answer
Please
is no,
answer.
sir.
Answer is no. You look at the other side. You are not compliant at all. You're opening account left, right, and north and west and east and everything, right? Not compliant at all. Don't take KYC. Anybody can come and open any account. Sending remittances without following foreign exchange. I mean, you can say on the face of it, my God, very innovative bank, very dynamic bank, not following the rules. You can just go, TOD is given, right? I mean, in the short run, it can be a very, very lucrative looking business, right? Not doing things compliant, in a compliant manner. But you might have short-term profits also, right? Simple thing, you just grant, a couple of millions and billions of temporary overdraft. I mean, your income, P&L will start shooting up. You will charge interest at 24% for every TOD you grant. Simple example I'm taking, right? It is as against granting a good quality structured loan at maybe 9% or 10% or 11 or 12%. Ad hoc credit you are granting, so you can grow your balance sheet overnight by granting a billion of a TOD. Your profit will also shoot up, skyrocket. Short run you can do it. Is that also a good proportion? Is that also a good proportion? Yes or no? Obviously the answer is
No,
no.
sir.
Answer is no. Then what do? You need to strike a middle, strike a balance. So the compliance has to support the business to do business in a compliant manner, right? So you, one side you have to be a kind of a supporting, always play a supporting role to business. If they come up with a problem, you should be able to give them a solution. Okay, you do it this way. I suggest you to do it this way and keep on helping them. Keep on helping them. Then you win confidence of them. Then they tend to come to you. If you are saying something not to do, but provide them a solution to do it, then probably they will develop confidence. And they will come to you and tell their problems to you. And if you only say no to everything and without giving any solution to them, without supporting them, without assisting them, then they will try to do things at the back of you. You might not know that it's happened, right? Then it's both are very detrimental. So you have to have the skills, the awareness, and all the skills that we discussed to earn the credibility and the level of respect and thereby acceptance at the senior management, not only at the senior manager, you can add on to say by the staff in general. And you should have good negotiation skills and analytical skills and the investigation skills, which I mentioned. Analytical skill is a very important thing. You need to analyze things properly. Then only you know, okay, if you analyze and you see if this trend goes on, we might have a problem here, right? Because I think in compliance, you have to do the reporting, the trigger points, right? During my time, you have to report your, the capital, the liquidity, then any change in the senior management, that type of certain trigger points need to be reported to the regulator on a daily basis, every morning. The purpose, what is the purpose? Go to the drawing board, go to the basics always. When you are doing something, think why? Have any of you all? I'm sure a majority don't even think why this is sent. Trigger points are sent. Is it still happening? Somebody can tell me. It was the case in my time. Every morning you have to send certain trigger points to the central bank, giving your liquidity position, giving your capital adequacy, giving your maybe your the top notch certain NPAs, changes in the top management, right? And there were so many important things to be mentioned to central bank on a daily basis. Are those still happening? Are trigger points being shared with the central bank or the regulator on a daily basis?
Yes, sir.
It's happening, right? So did you ever think why it is? What's the importance of it? What is the importance of it? Did you ever think the importance is? That's what I say. When you do something or ask not to do something, you need to ask the question why from yourself first. If you don't find the answer, you need to find the answer somehow. Then only you can do things in a meaningful and effective manner. Take the example of trigger points. Have you ever got this the question into your mind as to why the hell these trigger points need to be reported on a daily basis? Have anybody got that question in your mind, especially the compliance community here in this class? Have you got it or not got it? Okay, I don't want the answer for that. What is the importance of sending the trigger points on a daily basis? What's the importance? That I need an answer, please, from somebody. This is common sense. Banking is common sense, man. My understanding is that, my definition is that banking is common sense, 100% common sense. You take any banking regulation, any practice, the time-tested ones, all revolves around total common sense, right? You don't have to have brilliant, the intelligent people to do banking. If that type of people are there, sometimes they might fail because you have to take certain amount of risk when you are doing banking, right? Correct? Everything that you do in a bank, there is a risk. Everything there is a risk. You tell me anything, I'll tell you there is a risk. Even granting a cashback facility, there is still a risk. Very much close to zero, but there's still a risk. Right? So anything you do in the bank, there is a risk. So you need to be able to take risk if you are a banker. If you are not prepared to take risk, banking is definitely it's not a good profession for you. You need to think of some other alternative. Right? You have to take risk. Higher the risk you take, higher the return you get. Lower the risk you take, lower the return you get. No risk you take, no return you get. So this is a very simple formula. High risk, high return. Low risk, low return. No risk, no return. If you are not taking risk, then no return for you. So there's no point in doing banking. Right? So you need to take risk. That is important. So taking risk, right? You need to understand why. So my question, what was my initial question? Why are we doing? What is the importance of having trigger points on a daily basis? I'm just coupling these things to your practical day-to-day scenario. What's the importance of having the trigger points? Hmm? Okay.
So then the regulator knows that like where we stand.
Okay, I didn't get you well. Repeat it. Yes, I thought you were somewhere. Yeah.
Yeah, regulator knows then where we stand. Like every day when they get the trigger points, the regulator
Yeah.
knows that where we stand.
Okay. The regulator will know where we stand. Okay. Fine. That's correct. The answer is right. More than before the regulator knows where we stand, shouldn't we know where we stand? Your answer is right. I'm asking another question. Regulator will know where we stand. Before the regulator knows it, should we know or shouldn't we know? Should
We
we
should
know?
know.
Your answer is right. I'm not telling your answer is wrong. Your answer is perfect, correct. But I'm, making you the answer more comprehensive, making you to think. When I say you, it's not only you. May I know your name, please, who gave the answer?
I'm Bashini,
From?
Merchant Bank of Sri Lankan
Okay.
Finance BS.
Yeah. Thank you, Darshani, for that brilliant answer. Very good. Okay. Regulator to know where we stand. Perfect. Answer is right. My next question is, before the regulator knows, should we know or shouldn't we know? Yes or no?
We should
Others can answer, not only
We should
Darshani.
know where we stand.
We should know. Right. Now, we have to look at it in that terms. Now, compliance is supposed to report. Now, their job role is not confined to reporting. That's the point I'm trying to tell. Their job role is to know before central bank what is our position as far as the liquidity is concerned. What is our position as far as the capital adequacy is concerned? And they need to think proactively to see, right? Okay, our capital adequacy is, I think I'm not very in touch with the capital adequacy present because I have been out of the practicing banking for the last couple of years, right? Now, what is the capital adequacy ratio for the bank at the moment? So you take SRR, right? SRR had been 2% until recently, right? It was double recently, made 4 now, right? Correct? No, last week? Is that right? That's how I remember from the media reports and all that. Right. So, okay, SRR is, we say it was 2%. The capital adequacy, what is the capital adequacy for the bank now? Tier 1, Tier 2? Okay, we'll just assume a figure. Now, these things I think you must know. As compliance, if you are practicing, you need to know what's your capital adequacy. What is your Tier 1 capital? What is your Tier 2 capital? What is the regulatory requirement and what is your present capital? What is the gap or the buffer or the comfort that you have in meeting the regulatory requirement? Then you need to have some idea of as to what your credit plan, growth plan for the next quarter after next, for the year. Then you need to think and see if you grow at this pace, which is specified by our strategy or the credit plan of the bank, are we comfortable in meeting the Tier 1 capital? Are we comfortable in meeting the Tier 2 capital in time to come? Capital is something that you cannot bring in overnight. You need to bring capital. It's a fairly a longer process. Either you need to get the existing stakeholders to bring and infuse more capital, or you need to open it out and go for a offer and then raise capital from the public, or you need to go for subordinate debt, long-term capital, issuing a debenture or something like that, right? So all this must work in your mind as the compliance. The moment you see the trigger point, you need to know, okay, it's this. Are we comfortable? Yes. Today we are comfortable. Are we going to be comfortable tomorrow? Are we going to be comfortable in the next quarter? So you need to know. You need to know the regulatory requirement. You need to know your capital. You need to know the gap or whatever the comfort levels you are having. You need to have some idea of as to what your credit growth is going to be. What are your plans in the strategy? You need to know this. Then only you can tell the business, look here, we see a compliance risk in this, which you can probably take up in your executive risk committee, the internal risk committees. All of you know. right? I'm talking about governance. I will come to that. These are all connected. You have an executive risk committee meeting, ideally prior to the board integrated risk committee meeting. You are aware, right? So the external risk committee or the internal risk committee, or we may call it the executive risk committee, different banks may name it differently. What matters is it's an internal forum attended by all the business head, the key people, and chaired by the managing director of or the CEO of the company. That's such an important meeting where you will take and discuss all the issues. Executive risk committee. Compliance will go with the compliance risk papers, compliance observations, and tell them there's a problem, and we foresee a capital adequacy issue that's going to come up probably in the next quarter or the quarter after next, or maybe the regulator has issued regulations to meet certain, raising the bar at different quarters. By 2022, I think with this pandemic and all, they have put a kind of given some kind of a comfort to delay it a little bit, right? Otherwise, by 2022, I'm not 100% clear on the exact numbers, that we were to meet certain capital tier 1, tier 2. So the banks had to either bring in capital, or they may have to go and bring some, if it's not organic, some inorganic growth and merge and then meet the capital requirement. So it cannot be done overnight. It's going to take months and years sometimes. So this proactive thinking has to be there in the minds of the compliance officer. That's the point I'm saying. Right? So in the trigger points like that, you will see your SRR, are we comfortable? Are we doing the SRR properly? A. Responsibilities and accountability. Who is reporting the SRR? It is some maybe a junior clerk or a junior executive just reporting the SRR to the bank. Wednesday figures. Is some junior person reporting? Is somebody taking responsibility in the finance division for the accuracy of the figures given? Who is somebody accountable? These are compliance issues. You need to chip in at that point to make sure that the processes are there within the organization. Go back to the drawing boards. I think last lecture we discussed. There has to be the policy. There must be processes to comply with the policy requirements. So the compliance has to be sitting and supporting this, having an aerial view and eagle's eye on all this, sitting on top. Right? Is it clear? So you have to have good negotiation skills. CEO should have good analytical and investigation skills. Analytical skills. If you are not good enough in analyzing things, then obviously that you will fall short there. Right? You need to see what's going to happen next. Are we going to be comfortable in going in this trend? Or is there that something that we need to bring it probably at the executive risk committee and maybe at the board level to say we have to bring and infuse new capital into this organization if you are going to grow according to our strategy and the business targets. Otherwise, we are going to fall short there, because you go at that moment and say, if there's say 2022 March Q1, there's a certain capital requirement that needs to be made. I mean, business will do their business and they will not be worried about this thing. It will be your job mainly. It will be the CFO's job as well, or the treasury job as well. But you are not totally out in this process. You as compliance has a very important immediate role to play here, to look in the longer horizons to see where we are going to be in next quarter or 2022 Q1. We need to meet this capital requirement. Are we okay? The way our NPAs are rising, there will be more and more impairment, right? So the country situations, impairment will go up. So that means you have to set aside more capital, right? Okay, now if it depends on the government policies. If the government policies say go and lend more towards agri, which is 10% of the loan book now, all of a sudden the government can change their policies and regulator might come and say, you go and invest 20% on agri. Then you have to meet it. You've got to go on that. The moment you make 20% on agri-based lending, most of them would be without proper collateral. Then you got to keep more capital. So this thinking has to be there. That's the point I'm saying. So compliance officer need to connect all this. Now, if this requirement, just imagine, if the regulator tomorrow comes and says your 10% capital, the exposure on your loan book towards the agriculture sector needs to be increased to 15%. Just forget 20. So you know that your composition of your loan book is going to change, right? So then that means you got to provide more capital, because most of these agri sector loans, it's high risk. When it is high risk, you need to understand the little bit of capital adequacy principles, the regulatory requirements. If you are having, based on your asset-based capital is always tagged to the asset, weight of the asset, risk weight of that asset, right? The capital that you need to keep when you are granting a housing loan absolutely differs from when you are granting a commercial loan. It further differs when you are granting a agriculture loan. So this knowledge has to be there, right? Then you need to foresee. That's why you need to have the analytical skills to think what's going to happen next. Because if that happens and nobody take care of it, it just go on like that, and Q1 2022 arises. And then you find all of a sudden, my God, your capital is eroding, you are not having sufficient capital, then this is going to be a very serious problem for the bank. Very serious problem. Your ratings will come down like nothing. The rating agencies will rate you. Having less capital strains, your credit rating will come down. See the repercussions. Investors will look at it, they'll get excited, they'll pull their investments out, and the prospective investments will run away, right? When your credit rating is downgraded, I mean, the people will not have confidence. Even your customers would take their deposits out. So these are the repercussions. So you need to have that analytical skill and the proactive mindset to know what's going to happen if this works this way. If we don't change it now, if you don't do this correction now, we might go and end up with funeral in another year's time. So that's that type of thinking and knowledge has to be there. That's why I always bring that example. If you don't know your little bit of finance, if you don't know your little bit of at least in the accounting system, the impairment, the capital requirements, then you will not understand this job properly. You can pass on the regulation, that's fine, but you will not know what's going to happen next, right? So that is why the compliance job is so important. That is why the compliance officers need to have special skills, competencies, and the expertise in doing business. All right. CEO should have good management skills, obviously. You got to be a very good manager to manage these things. You might have your expertise, you might have your organization skills, the oral and written communication skills, you might have listening skills, all that you might have. But if you don't have good management skills, nothing is possible to be put in the right frame. Right? So compliance officer having all that needs to be a very good manager, effective manager in managing things. Right? The next point, the compliance should be good presentation and training skills. Extremely important. Training is a very vital part of the compliance. You have to train. You have to train your people. Training comes under the HR and the training center, that's fine. But as compliance, you need to be an effective partner in that training team. You got to closely work with your training department, the HR or whatever the training division, in training your staff. right? There are certain areas it comes directly on the compliance plate. The 100% responsibility and accountability lies with compliance on those areas. Example, anti-money laundering regime, combating financing of terrorism, directly coming. There's no other process owner for that, right? So the FTRA, section 14 tells the compliance officer needs to bring sufficient awareness among all members of the staff in the bank about the AML-CFT regulation. So it becomes part of law then. So may I put it this way? The only area that I have come across where there's legal compulsion for training is anti-money laundering, which is the direct responsibility of the compliance officer of the bank, not the training head. That responsibility has been casted on the head of compliance to make sure that all staff within the organization have a fair knowledge and idea of the AML regime. The commissions and omissions, what to do and what not to do, what to do to comply with the regulation. That training has to be there. So therefore, the compliance officer needs to be a good trainer with good, skillful trainer. Training skills has to be there. Because nobody is going to come and give you training, especially on the MLCFT and other regulatory requirements, right? So you have to be a very good trainer, having quality training skills. Extremely important. I think those who are in the compliance would vouch for this, especially in the banks. You are maintaining your correspondent banking relationships, right? With that, you have your Nostro transactions. You do foreign transactions. Your settlements all will happen through your Nostro accounts. In order to have them, in order to facilitate this foreign transactions, you have to have your various correspondent banking relationships, right? And they will have their reviews in maintaining the correspondent banking relationship, right? Then one special area that they are really harping when you're having that correspondent banking relationship review meetings is how your training, how effective your training is, how many staff members you have in the organization. Have you trained them? Do you have documents? Sometimes when they visit, certain banks used to visit you to carry out the annual reviews to see whether how compliant are we. Training is one important aspect that they are always looking at. If they find that if we are unable to prove that we have done our adequate training with sufficient documentary evidence, that will definitely affect the correspondent banking relationship. Sometimes they threaten to withdraw the correspondent banking relationship. Then your foreign trade and foreign transactions will come to a standstill. It will be badly affected. Then it's your 100% your responsibility, right? They come and sometimes want to see the document to prove how many training programs we have conducted, how many training people who we have trained. Are there evidence? Have you done assessment? Have you assessed them on the training provided? How much have they gathered? They go to that extent, right? Okay? All that happens. So unless you are a good trainer, you have good training skills, then it's going to be a major issue. So you have to be a very good trainer when you are doing compliance. Right. So we have covered up to the skills required. So shall we take a break? So we completed discussing about the compliance, the skills required by the compliance officer. We'll move on to the compliance activities. Right. So the compliance activities can be broadly classified into two. Now, just tell me, you all were given shared a handout the first lecture last week before last. How many slides are there in that handout? What you all have been given?
$31, sir.
31 slides.
31 slides, coming up to managing key responsibilities, no? Okay, right. Okay, just remind me at the end of the class to ask them to send you the other slides also, okay? Right. Now we are on slide number 20. Okay. So we are basically discussing the compliance activities. So as you would see, the compliance activities can be broadly classified into two segments, which are called planned activities and on-demand activities, right? By virtue of the meaning given there, planned activities are the activities that are planned, pre-planned activities, those that are anticipated and may be scheduled in the compliance program. Now, each compliance department will have a compliance program schedule drafted, presented to the BRMC and approved by BRMC as the compliance program for the year. Correct? So this program will entail full details of all the compliance activity that you are planning for the year, including how many compliance checks, or some may use the word compliance audit, and what type of other, the assessments, compliance risk assessments, all that will go into this program, where you will present to the board integrated risk management committee and get their approval for that to be carried out during the year. So that's called planned activities, right? And planned activities are those that are anticipated and may be scheduled in the compliance program. So on-demand activities are the ones that are not so scheduled. It can arise as and when the need crops up, right? Example, now say, suppose there can be a new product that is being launched by the bank. So the compliance will have to go through the product features and give compliance clearance that the product is compliant. So it can be an unplanned activity or on-demand activity. Okay. So those may not go into your compliance program because such products or initiatives might come up as a requirement that may crop up on a day-to-day basis. Example. Or sometimes maybe that there's some investigation that you have to carry out in a particular area. Or maybe that there's some, new regulation like FATCA or something that came up, which you may probably have not captured into your compliance program. So those are called on-demand activities. Then the planned activities are described as scheduled activities. On that basis, any failure to comply with the planned activity or complete the planned activity, it can be viewed as a very serious lapse on the part of compliance, right? Because it can lead to various reputational damages. Leaving the reputation damages out, it will weaken your compliance, culture, or rather the compliance program, which we have listed for the year. Now, when you prepare the compliance program, right, we can discuss it when we move on as to how you would do the compliance program. It is based on the risk-based approach because your resources are limited. The areas to be covered are extremely high or large. Then you would have certain, criteria in deciding what will go into the compliance program for this year, right? So if you fail to comply with or rather complete the planned activity, or in other words, the compliance program which have been prepared and scheduled to be conducted or carried out during the year, it can trigger very serious repercussions, including reputational damages and risk. So the obligation assigned directly to the compliance officer by the law or regulation. Obligation assigned directly to the regulated entity. So when you are doing your compliance program, so you have to be mindful of these things. What are the things? What are the regulatory obliged activities that you need to carry out during the year? Now, for instance, your compliance policy. It has to be reviewed every year. Your AML policy needs to be reviewed every year. It's a regulatory requirement, right? Then maybe your other policies in the bank, right, needs to be reviewed every year. Related party policy needs to be reviewed every year. For any policy for that matter, generally needs to be reviewed every year. So you have to make sure that the policies that you own directly, example, AML policy, compliance policy, some banks may have compliance risk policy. Likewise, you will have different policies which directly comes under your purview, which will definitely go into your compliance program as a matter for the review during the compliance program, right? Likewise, you will have an item in the compliance program to make sure that you would ensure the other policies which are owned by other stakeholders within the bank, not directly owned by compliance, but those policies also need to be reviewed. I'm just taking an example. So in your compliance program, you need to carry out a check or a test to see whether the other policies, all policies for that matter in the bank are duly reviewed as regulatory required or as mentioned in the policy itself, duly reviewed and put before the board and approval sought for the reviewed policy. So that's an immediate or an important requirement in your compliance program. So I just took it as an example, right? Then you need to carry out the due diligence on your customers. It has to be part of your compliance program, ongoing due diligence. So through your AML system, right, you will have certain policies. Example, then sometimes you might say in your compliance program to introduce X number of new scenarios into your AML system, to review the risk profiles of the customers. I'm just giving you an example, which will go into a compliance program for the year. Reviewing of the customer risk profile from AML CFT perspective, which is as per your system. You will have low risk customers from AML risk point, medium risk customers, and high risk customers. Then your AML policy will tell you how frequently you would review the low risk customers, how frequently you would review the medium risk customers, and how frequently you would review the high risk customers. So when the policy says that high risk customers are to be reviewed every 6 months, for instance, that's the general norm, minimum. So your compliance program should carry that line item. Review all high risk customers every 6 months. Similarly, you have to say, review all medium risk customers, which means that the tenor requirement as per the policy. Policy may say every medium risk customers need to be reviewed every 2 years or 3 years or whatever it is. So there are certain customers that will fall within the gamut of the current year to be reviewed. So that's going to be an important and compulsory item in your compliance program for the year. So you have to do that. So that's why I say, even the textbook says, missing the compliance, the activity, scheduled activity, or the planned compliance activity will trigger more risk because it is a must that you somehow do it, right? So the failure to complete the planned activities can be extremely serious, both for the compliance officer and also it could result in the reputational damage. So the obligations assigned directly to the CEO by the law or regulation, obligations assigned direct to the regulated entity. So this needs to be captured into, this type of requirement need to be captured into your compliance program. Right. Then the risk-based compliance monitoring, which I mentioned. Right. You have to use your risk-based approach in prioritizing the potential issues with greater risk exposure that need to go into your compliance program. Right. So how do you do that? Risk-based approach, using the risk-based approach in prioritizing the items that needs to go into the compliance program. Tell me, how can you do that? Do you do that in your day-to-day compliance activities? Especially those who are in compliance can tell. Yeah. I'm sure somebody can definitely answer. If it's not done, think about it and answer. How can you quantify or rather prioritize? Now we are talking about the on-demand, you mean the planned activities. We understood, no, there are two different types of categories of activities, planned and on-demand activity. Now we are still on the planned activity. I gave you examples. And it says the planned activities or what will go into the compliance program will be decided by the obligations assigned directly to the compliance officer as per the previous slide. And also, it said the responsibility of the assignment or obligations casted on the entity by the regulator. Example, to maintain an SRR at this X percentage. That's a requirement. So the compliance will to make sure that you carry out a compliance check in every year, that your SRR requirement is duly being met. It's not an easy task, right? SRR means statutory reserve requirement. So in short, if you just put it in a very layman language, you need to keep a certain percentage of your total deposits either in cash form or treasury bill form with central bank. So that's the SRR requirement. Now, fulfilling this is a bank's obligation, regulatory requirement. So which definitely needs to be under the microscope of a compliance. It's a compliance requirement, but met by, not by compliance, by the bank, and the process order will be either head of treasury or head of finance, depending on the different, way the policies and the functions are assigned. The main stakeholder or the process owner or the responsible person to do this will be either CFO or the head of treasury or somebody like that. But what is the role of compliance there? What is the role of compliance? I think about 22 people are logged in. Can somebody answer? What is the role of compliance there? On that example? Please, owner. You have any idea or you don't have any idea?
Yeah, we have to monitor whether the SR requirements are met by the bank, and then we have to capture it to our dashboards and inform BRMC whether if there's any non-compliant.
Yeah. So okay, correct. So what you have to capture it into your compliance program. So thanks, Mano. Thanks for the answer. But uh, how do you do this? Now, what is the action that you say this is to be monitored? This part of one line item in your compliance program. Then you need to have a how are you going to do it? Just taking the figure down may not be merely sufficient. Because they declare and say, okay, we are maintaining. Now, up to last week, like the SRR has dropped down to 2%. Correct, Nomana? 2%.
Yes,
Now it is increased to 4%, right?
increase. Yeah, it is increase.
Yeah. Now it is last week, it's increased. So we'll say 4%.
Increase, yeah.
Now, how do you, what can the compliance do about it? Okay, what type of activity the compliance are supposed to do here? A, you have to make sure that the bank meets that 4% SRR. And probably you will get a confirmation from the CFO, whoever it is, that the SRR is this. So that's okay, some comfort is there. But beyond that, if you are a good and effective compliance, even because it's very critical, if you don't meet it, then it's extremely critical. There will be a very heavy repercussions. Then the compliance, what they can do is, they can do a kind of a review, some kind of a system check as to whether the account that have been captured into this system of calculation of SRR are comprehensive and robust enough. The basic is you have to capture all deposits held by the bank and keep 2% or 4% or X percentage of that, which is defined by central bank, as in form of cash or treasury bill with central bank. So, in practice, how it is done, it's not an easy task to identify the deposits, right? Now, when you say deposits, it's not only the customer deposits. Then you can, straight away take it customer deposits. Then there are margin accounts, right? If you go through the direction properly, SRR, go to the original direction, it will give you the definition of or the account, the type of account that needs to be taken into consideration for calculation of SRR. Straightforward ones are yes. All customers' current savings and other deposit accounts. Besides that, all margin accounts. There are a whole heap of margin accounts in your balance sheet, right? In the impersonal section. Then there can be certain monies that are parked under suspense account, right? Due to maybe reconciliation issues and all that, which can be part of the deposits, which can be part of the deposit. So when you are doing the compliance function effectively, you have to at least once a year, if good, if can done, at least once in 2 years, go into the system, probably with some, the support. Then again, that expertise comes into play. And make sure that all accounts which carry deposits or funds in form of deposits, including suspense, margin, and all that, are captured into this system, because these figures are not manually extracted. It's going into the system by way of a system transaction report generation. So for the report to be generated, all accounts need to be mapped and captured into the process. So an effective compliance division needs to go up to that extent, at least to do a review, to see whether all accounts have been captured into the process. The point I'm driving here is the compliance function is so large, so expanded. So you can't do it every day, every week, every month, every year. At least you need to do this on some kind of an agreed term, which probably you may come to terms with the BIRMC, right? and carry out this exercise to make sure that the accuracy of the figure declared by CFO or the finance and which the bank is maintaining in terms of SRR is correct. Because in the central bank inspection, if they come, and they will definitely go into it, and then they carry out, external auditors might go into this to see whether the accounts and details have been captured into it. So it has to be part of your compliance program, for an example. So then another example that comes to my mind, the fortnightly reporting to FIU, transaction of 1 million and above, right? It is system generated, fine, but once in a way, I think it's good to do it on a annual basis through your compliance program. Bring it as a line item to carry out a check to see whether all transactions which are appearing in different forms and formats, including treasury, the money market, right? There can be various other new products that have been captured. Are those included into the program? So the system would identify them if the transaction value is $1 million or more. Correct? Did you get the hang of it now? Compliance function is that. So you are doing your due diligence in such a way, because you can't do it every day, every night, and every week. But you need to take comfort and give that comfort to the board as well, that the internal processes are in place to meet the regulatory requirement. You know how serious if a fortnightly reporting on the CTR and EFT in out are missed out. You can be fined 3 times of the value of those omissions. That's going to be a huge issue. Those who are having hands-on experience in the AML side will vouch for this, right? You can't say it's a system error and it has dropped by the system. It can happen, but then if you have done this exercise and put it on record that this has, there will be some comfort, right? So these are the items that needs to go into your planned compliance activity through the compliance program. I'm just giving you a few examples, right? That's why I say you miss out any planned activity, the repercussions can be extremely serious, and which can even get extended up to having regulatory and the reputational repercussions as well, and financial repercussions also if there are fines and things like that, right? So in order to identify items for your planned activity or for the compliance program, in other words, you are supposed to use the risk-based approach in identifying items for the planned activity. So how can somebody help me out or suggest, how will you use this risk-based approach in practical terms to identify items that needs to go into your planned activity or the compliance program? Can somebody comment on it? Yeah?
New directions issues by the regulator.
Sorry, come again.
Recently issued directions by the regulator.
Okay, what's your name?
Randilo from Asset Line. And another thing, if there are any significant findings by the on-site audits.
Okay, yeah, good answer. You can not only the on-site audit, right? You can go for repeated high-risk items and identify the areas that are drawing or rather triggering high risk for the company, as long as those carry regulatory repercussions. You can put them under the microscope. You can take it onto your radar. That's one. Okay. Right. So you will basically, okay, in doing that, the theory is you would look at the probability of such a thing taking place, occurring. Probability of such a thing occurring within your organization. Right? The answer you gave, Randilu, the frequently reported issues through your regulatory examination. So I added not only regulatory examination, it can be your external auditor's audit report, it can be your internal audit reports, right? So suppose your internal audit report says the KYC is not taken, or the KYC taken is not effective, right? So that's a very serious matter, right? So if the audit report says, okay, impairment has not been done properly, right? Your general provisioning is crooked, right? Or you have very high cyber security risk, which can lead to, leakage of information, leakage of valid data and things like that. High risk, right? So the segregation of duties are violated within the organization. High risk. So it can trigger various compliance issues as well. So you take information from those sources and put them on a scale where you will look at the probability of that situation occurring within the organization as against the severity of the issue or the potential impact in case if that so-called thing happens. Right? Two things you are looking at. The probability of such a thing or such and anticipated occurrence within the organization. Probability. As against or coupled with the impact to the organization if that happens. Example, okay, you take the same SRR example. Now, violating SRR, is it a normal thing or a serious matter? Violating SRR? What's your knowledge about it?
It's a very serious matter.
Yeah?
Very
Violating
serious.
SRR requirement is extremely serious. Very serious. Okay? So, if SRR is violated, go on the one axis, the potential impact is very serious, correct? Very high, right? Then you go to see how probable it is for a violation to take place on the SRR. Now your compliance checks will come into play, right? Now you can't be happy and give that comfort to the board and say, or you yourself can take that comfort to say, okay, we are meeting the SRR. Fine, we are meeting the SRR. That is, they say, and there's a dual control responsibility and accountability parked on them. That's fine. But remember, compliance has a role to check on it. Internal audit has a role to check on it. Whether those figures are right, whether we are having the processes. Now see, we have a policy to meet the SRR requirement. In our liquidity policy, definitely it will say in the bank, board approved policy, you have to mandatorily keep your SRR minimum at the specified level by the regulator. So you can't go below that. You have to keep it. And I just saw above. That's the policy says. Now, what did I say? When a policy is approved, what is the other thing that you need to have? The moment the policy is approved, Yeah, I want an answer now. I'm going on what we discussed. Can somebody answer? You have the policy. There's another thing that is required. Now you can have a matchbox, right? You can have a box of matches. For you to light it, what do you need? What do you need to light the matchbox or a matchstick? What do you need to have? Huh? What do you need to have? You need to activate the process, right? You need to, rub it against the matchbox. And then you need to have oxygen for that to light. If you do it in an environment where oxygen is not there, will that light? No. Right? So likewise, you can have the policy, very well articulated, board approved policy, nicely, well filed document, compiled document. But you need to have what? What do you need to have? You have been in the last lecture or even the first part of this lecture should answer. What do you need to have?
Procedures.
Yes, you have to have the processes and the procedures. Now, these are very important. Now, you cannot forget this, right? I'm telling the entire class. What we discuss here, it may look very simple on the face of it, but there's lots of underlying concepts being discussed in detail, which is extremely important and essential for an effective compliance culture to be maintained in the organization, which is the bread and butter of compliance. So you have to have sufficient, adequate, robust, efficient procedures to meet the policy requirement. Now, going back to our question that we were discussing, SRR. Now, we understood in the y-axis and the x-axis. One axis we discussed, the impact is very severe if that happens. Then the other thing is the probability. How probable it is for this to happen, this violation to happen in your organization. Then what are the things that you would look into as compliance? You need to look at whether there are good, efficient, sufficient procedures to meet the SRR requirement. Okay? Right. When you look at the procedures, okay, you see, okay, assigned, the responsibility is assigned, people are there and they are working it out, they are calculating and then meeting it and thus reporting and everything. Fine. But is that still enough? Because these are system generators. Nobody is manually calculating. That is where you need to go into it to see whether all the qualifying accounts are captured into the process. Did you get the point now? Right. If you have done it, the probability of a violation in SRR is rather remote. Right? But if you know that there aren't any procedures, probably SRR is just manually worked out and it is being done by a junior officer in the organization and nobody above them is supervising. No audit has taken place. Right? There are no system support and the compliance also has failed to carry out this in-depth study into the process. Then the probability of any violation taking place in SRR is high, medium or low. Please
It's
answer,
high.
will you? Huh?
It's high. It's high.
It's high. It's high. So you are the judge. That's what I say. You have to use the risk-based approach in deciding and determining what needs to be captured into a compliance program. Okay, you are using two main criteria or the techniques: the probability of such a thing occurring or happening, as against the severity of the issue if that happens, or the impact or potential impact of that commissioning or the omissioning of the issue. Certain things can happen due to certain commissions, kriya nisa. Certain things can happen due to omissions, kriya nokriya nisa. Right? Violations can take place like that, two ways. One is by commissioning certain things, one is by omissioning. So whether it's a commissioning or omissioning, as depends on the matter, you have to see how probable for then such a commissioning or omission to take place. So that's your call. That's why you say you need to use the risk-based approach in determining to, or rather prioritizing the potential issues with greater risk exposure to the bank, which definitely needs to go into the compliance program. Now we are discussing many things putting together. We discussed about the compliance activities, plan, on demand, plan activities. Okay, we connected it with the compliance program. And if anything unable to complete, the risk is high. Now we are understanding why the risk is high. Because what will go into the program is definitely on a risk-based approach. So the higher risk ones would certainly get into the program. So if those are not being duly monitored and captured and reviewed, the risk is high. So therefore, it will end up with very serious risk to the bank. Right? So is it clear up to this point? I think you would be very clear on these lines, because this is very important to do practical compliance within the organization. Put things into practice, because you need to go as a different and enhanced product to the organization as a diploma holder. And the organization should be able to see, okay, we are having a much more refined, developed product in our compliance chain. So there's a new value additions coming into the process. So that's the ultimate advantage or the ultimatum that we are looking through by providing this type of training and providing professionals into the compliance area. Right? So you should understand it very clearly. So that is how the risk-based approach is used in identifying items which needs to be prioritized based on the risk-based approach, which will be coming on the radar of compliance, because you can't go and check anything and everything every day. Correct? Okay. Now we will see what these on-demand compliance activities are. I think I mentioned it at the beginning. This refers to activities that may occur on ad hoc basis. It can all of a sudden crop up, right? When such thing crops up, compliance will have to oblige and attend to those also, because that's also important. But it should not be done at the expense of the losing or missing the plan activity, because the plan activity, the risk is extremely high. By default, it's high. Right? So in practice, on-demand compliance work often arises from requests coming from business lines. That's why I took that example. Right? A business line may want a new product be introduced. Right? So then compliance will have to chip in there. Okay? So ideally, the compliance needs to be in the product development process right from the beginning for very many valid reasons. Right? So it's a regulatory requirement that all new products or modifications to existing products or removal of products, right? Or introduction of new products, all that needs to be cleared by compliance. That's the regulatory part. Compliance has to be within, as per the international best practices and the BASA, right? So the compliance needs to be part of this process right from the beginning. Otherwise, what happens is they may develop the product and present it to compliance for the clearance, like maybe to risk and compliance and insert it. And if you have to say something there which needs the need arises for the developers to go back to their the drafting levels or the crafting levels, which means additional time, extra time needed to redo the process. But by virtue of the fact that compliance getting involved in this right from the beginning, you can see and advise them on the spot then and there. This is going to be a violation. So therefore, this feature needs to be taken out or amended in the product. Right? So the point here, main point we are discussing is like that there can be on-demand activities arising from time to time, which are generally come from the business lines. So you need to oblige that, but subject to not compromising to default or other fall by the wayside on the planned activity. So among the other compliance activities, the following are prominent: developing compliance training programs, developing the bank's policies and procedures, right? Providing MI to internal and external audits, working with the bank risk management function, building a strong compliance culture, managing conflict of interest, dealing with any enforcement proceedings that may arise, right? So you have two different classified segments: planned activities and on-demand activities. Alongside, you have various other activities that will come and land on your plate on your day-to-day business or day-to-day compliance function. Some of them are like this: developing compliance training program. So you have to have compliance training program for the whole staff. AML being one of the with regulatory and legal compulsion. Besides AML, other areas also you have to train people to do business in a compliant manner and tell them the pluses, minuses, repercussions if deviations and the violations are made. So the developing bank policies and procedures. So the compliance will be always be on the lookout. If it is your own policy, you will be the draftsman of the policy itself. But there are many policies. Maybe compliance will have 2 or 3 or 4 policies, the most owned by them. But there are various, close upon 60, 70 policies within the bank, where compliance will have to keep in their radar. So the developing the bank's policies and procedures, compliance has the definite role to play, irrespective of whether they are owners of that policy or not. Once the policy is crafted, you have to go through it very carefully to see whether all regulatory requirements governing that particular area are duly captured into the policy. Or in other words, whether this policy is breaching or conflicting any regulatory requirement that relates to that particular area. So that's why you say the compliance needs to keep a tab on every policy of the bank, right? Any policy, it can be a treasury policy, it can be the provisioning policy, it can be the fixed asset policy, it can be the depreciation policy, right? It can be the AML, rather ALCO policy, assets and liabilities. It can be anything. No matter what the policy is, operational policy, operational risk policy, right? Credit policy, it can be any policy. There are hundreds of maybe, policies within the bank. You as compliance needs to go through these policies and make sure, A, whether all the regulatory requirements related to that area are duly captured, whether there are any violations or breaches arising from the provisions of the policy when you compare that with the regulation or the law. So that's the compliance role. Providing MI to internal and external audit. You are the conduit, right? Now, here the textbook says internal audit, the internal and external audit. It can be at times in certain banks providing information to audits is done by finance as well, or CFO, the finance department, especially the finance related ones. But any information going to external parties, especially to the regulator, compliance ideally should be the main contact point where all information routed there and they share the information with others. There are lots of benefits you can derive by having that practice within the organization. So it's part of the creating that compliance culture. It is where you can go and influence your corporate management, your leadership team, the CEO, CFO. Okay, let's have this policy. Let's bring this process into it where compliance will be the final contact point where all information routed through them. Right? With that, there will be lots of responsibilities being assigned on compliance. When all information routed through them, you will see whether those informations are fully authentic, whether the accuracy is there, right? Though you can't go and check them accuracy one by one, at least whether these areas have been checked by the internal auditors on a regular basis, right? Now, the internal audit, when they are preparing like compliance, preparing their compliance program, internal audit, when they prepare their audit program for the year, needs to look at, like the risk-based approach we have, they also have certain criteria to decide what and what items will come into the audit program this year. That will be based on the audit policy of the bank. Audit policy will say how you would capture areas or items into the audit program of the year. There are regulatory compulsion to carry out internal audits on certain departments. Regulatorily, they are compelled to do. Treasury, risk, then finance, risk, treasury, fund, middle, back office, then the finance, compliance, and risk department. Regularly, they are bound to carry out compliance, the internal audits on these departments. Sometimes they leave out compliance, but other departments, they need to every year carry out their process audits to determine things that will be captured. Likewise, different banks will have different. Then you will see have a criteria to carry out internal audits on the high risk branches where the previous audit reports have thrown out high risk ratings on certain branches. High risk process areas needs to be audited on an annual basis, right? So the compliance will see in the policy. Now we are talking about the compliance function. Compliance will, when checking the audit policy, compliance will have to make sure that the audit policy is, duly framed. Whether these requirements have been built into the policy. Correct? Now see the width of the large spectrum of compliance in every area. Right? So you understand now it's not easy to carry out the compliance function and bring that compliance culture into the organization. If all these things work together and get connected together, you will see that automatically a very good compliance culture will automatically develop within the organization. Right? We are talking about the providing MI to internal and external auditors. So having compliance in the middle where all information shared outside are routed through compliance will definitely have some idea as to what this information is all about. And of course, they can carry out their trend analysis to see whether to get a fair idea of as to whether these numbers are accurate. Right? So you give say somebody the regulator wants the customer information. How many trade-based customers are there now today? Exchange rates is a burning issue all over the banking industry, right? So probably they may have to want some information. How many trading customers do you have? How many customers who have open LCs during the last 3 months? How many customers who have sent their request but we are unable to open LCs due to the foreign currency crisis we are having? How many LCs against which the bills are already matured and we are still unable to retire the bill due to not having sufficient foreign exchange in our reserves? So these are very vital information. I'm just taking an example, right? So if the compliance has a track of these things and regularly having this type of information being monitored, any drastic, outliers will be easily spotted. They have their trends now. Right? Now, last month, we had, say, 500 trading customers. And this month, we come and say, we have 5,000 trading customers. It can occur due to a human error where one digit comes and gets included in the figure. It can be a typing error or a human error or total negligence or whatever it can come. But the advantages of compliance sitting in the middle and routing this information, because though you are not going to check, if it comes, an effective compliance department would always make a cross check at a glance to see whether these numbers are going side by side, realistic on the face of it. Last month 500 can't be 5,000 this month. Very rarely it can happen. In that case, you can always go back to the sources and ask to confirm whether they are right or wrong. And obviously it might come and say, no, it's a typing error. So see the importance of this function. Right? So the compliance will play that role also. Some banks it will differ, but at least for the regulator submitting information, compliance has to sit in the middle and be the center point where informations are exchanged between the bank and the regulator. Then compliance needs to work closely with the bank risk management function. Under governance, I will explain this. The 3 pillars of defense: compliance, risk, and audit. Compliance, risk, and audit. Right? The 3 watchdogs, the 3 defense lines, they call it. of the bank. Most of the textbooks say primary defense line is the business or the operational level. That's the first defense line. Because everybody is given dual control, procedures are there. You have to follow the internal procedures, rules, regulations, the instruction manuals, the operational manuals, and things like that. And that's the first check, first line of defense at the operational level itself. Okay. Then most of the textbooks say risk and compliance are sitting in the second line of defense, and internal audit sits in the third line of defense. That's what the most of the textbooks say. But my personal view, I repeat, is compliance is the third line of defense. Don't give this answer when you're answering any other question papers, right? I'm repeating my personal view. Only thing, I have not done a research paper and established this. But generally the textbook says first line of defense, business, second and third line, risk and compliance, and third line of defense is audit. But I personally feel by involving in the compliance function, if I am to rate, I would rate compliance as the third line of defense. The simple reason I can say, it's a long thing, I mean, you have to discuss, you have to support this with facts and, numbers and do some research and establish and prove it. That's a long way. But my gut feeling and my little exposure into the game tells me, no, compliance technically can be considered as the third line of defense. I am repeating, don't write this answer when you're answering any other examination papers, because the textbooks tell a different story. But why I'm saying this is the compliance function is so important, because why I call it as the third line of defense is compliance is supposed to go through all the policies of the company or the bank. Make sure that all policies are have been prepared, keeping in line with the external regulations, which includes the directions, guidelines, the regulator instructions, plus the law of the land. Policies need to be framed, keeping in line with it. And also compliance is supposed to make sure that there are sufficient, efficient processes in place to meet the policy requirements. Right? No other department is supposed to get involved to this extent. They may get involved in this at different times, at different levels. But compliance is a must that they should go through every policy of the bank. Every policy of the bank. And give their clearance, saying, okay, this is fully compliant with the regulation. Or there are no breaches with the regulation, no violations, no deviation. And your compliance function doesn't end there. They have to get back and then again to see whether there are processes, adequate and sufficient and robust processes are there to meet the requirement of the policy. If not, you have to liaise with the parties concerned and bring those processes in. So therefore, I feel they are sitting on top and having an eagle eye or a helicopter view or aerial view, where everything happening in the bank coming under the radar of compliance, technically, which should actually be practically also. Right? Anyway, that's a matter for this thing. But what is important for you all at this moment to see how important the compliance role is. And that's why you need to work very closely with risk department, and not only with risk department, you have to very closely work with all business verticals, and provide it that comfort need by the business, or rather the board of directors, to carry out the business in such a way that the bank is fully compliant in carrying out the duties. Right? Building a strong compliance culture. So obviously, when you do this, all this put together, which are knitted, very well knitted, to bring the final product out, you will see that automatically the a strong compliance culture will be created within the organization by putting all these acts together. Then another one is managing conflict of interest. That's another important thing the compliance needs to look at. How to manage conflict of interest. Can somebody tell me what you mean by the conflict of interest? Can somebody tell me what is meant by conflict of interest? Yeah? What is conflict of interest? Yeah? I must have some names and then call. All with me now? Or? So what do you understand by conflict of interest?
Using their powers and authority to gain their control.
Hmm?
A party participating into a transaction where he or she has a direct or indirect interest.
Direct or indirect? Input.
Interest.
Interest, yes. Yeah, right. So, by doing something, if that party who are involved in that transaction can make or will have a direct or indirect interest, as a result, there can be foul play, right? Conflict of interest needs to be avoided, right? So, managing conflict of interest is something that comes on the plate of compliance. So, you need to make sure that conflict of interest is duly addressed by the bank. How do you do that? By following the governance regulations and the requirements and the international best practices. Example, related party transactions. So the related party transactions, there are several requirements that the bank needs to fulfill or comply with in connection with related party transaction. Right? Starting from having a related party policy, then reporting of related party transactions, right? So the main underlying concept being no related party should be given better treatment than the usual treatment offered by the bank to an ordinary customer or an ordinary external party. So these are the related party the concepts. So how do you ensure conflict of interest is avoided within the bank is by putting these governance regulations into practice. Right? If it's related party, no better treatment can be provided. Example, if a director is involved or the bank is doing any transaction with a company which is owned by the director or where a director is having influential control or controlling stake or basically stake more than 10%, which is considered as having influential powers to make the decision-making addressed or affected, then compliance will have to make sure those are built into the processes and the policies, right? So that's how you avoid conflict of interest within the bank. Governance requirement, certain committees, who should sit in this committee and who should not be sitting in this committee. Example, executive directors cannot head the audit committee or the risk committee. It's a governance requirement because there can be conflict of interest, right? So the international best risk practices are violated. There can be conflict of interest, especially when okay, banking sector also sometimes, right? You have one main stakeholder who basically now governance requirements, it has restricted the banking corporations or the banking business. Nobody can have more than 10% of stake within the banking organization unless it is very clearly stipulated and approved by the regulator, right? Those are governance requirements to avoid conflict of interest. So the compliance will have to make sure that these things are in place. Okay, when the board subcommittees are formed, who and who are sitting in those? Are executive directors sitting in this? So governance, part of compliance, right? Whether the composition is right. Okay. Doesn't mean that the bank can't lend to a related party entity. Doesn't mean that the bank cannot take deposits from a related party business. Doesn't mean that the bank cannot enter into any business contract or a commercial contract with a related party entity. No, you can. But there are certain requirements that you need to meet. If that's the case, A, it shouldn't be favorable treatment. B, it has to be sanctioned by the board in absentia of that party concerned director, the subject director, without in attendance. The board needs to approve it, right? So these are the good governance and governance principles and practices which involve the conflict of interest, and the compliance need to make sure that the sufficient processes and the procedures and the mechanism is there within the organization to avoid conflict of interest, and you need to manage the conflict of interest, right? And also compliance needs to deal with the enforcement proceedings that may arise, especially certain compliance officers are very much familiar. They are dealing with the law enforcement agencies, the CID, TID, FIU, right? Various law enforcement agencies, sometimes the excise department, right? So you have to deal with them. That's part of another compliance. Enforcement proceedings, right? Needs to be attended to by the compliance. That's another part of important functions coming under the compliance division or the compliance officer, right? So now we have understood what compliance, the skills required, right? And then the JD, right? And then what are the activities, right? So we'll move on to identify the key relationships to be maintained by compliance. Key relationship. In order to successfully achieve regulatory objectives, the compliance officer should identify, establish, and manage key relationships with internal and external parties, right? So these relationships are maintained with internal and external parties both, right? So compliance officer should identify and establish those relationships. Not only that, they got to manage those relationships. So what are these? Whilst maintaining relationship, it is vital that the compliance division needs to retain its independence. Extremely important. Extremely important. Right? So whilst maintaining those relationships, compliance will have to maintain their independence element. They're independent. Right? Now, doing business, as we said, we have to play a supportive role, a supporting role. Help them, assist them, interpret things, provide them training. While doing all that, it's a very complex kind of a job role. You have to always make sure that you keep your independence. Now, when there are issues also we discuss, you have to report it to the board. Then probably you have to discuss with the internal, not probably have to discuss with the internal stakeholders in order to get the issue sorted, get the issue rectified, right? At the same time, you have to maintain your independence. That cannot be compromised, right? What do you mean by independence? If you have to report something and if you think this merits a report, just take STR, suspicious transaction report, you are raising to FIU. You don't have to ask for approval from anybody. But at the same time, you can't be tipping it off. You can't be going and telling everybody, I am raising this STR. No. But as a matter of courtesy, you can keep maybe the MD or CEO informed that there's an issue like this and we are raising this STR. That's a very exceptional situation, right? But then you need to take action on it. You need to take action on it. So there can be a certain, operational issue, maybe very much unique to a particular region. Maybe some problem with the way the region is managed. Maybe impairment not done properly. Maybe the recovery is not done properly, right? Maybe the account opening is weak, not sticking to the guns. Then your independence will make you bring that to the notice of the higher authority, the board. But you will bring it to the notice of the parties concerned with a clear idea or view of resolving the matter, solving the problem. But nobody can tell you, okay, we will try and do this, you can report it next time, don't report until we sort this out. No, you can't say that. You have your independence. That's your independence, because if you are not independent, your senior officer can tell you, don't report, then you have to oblige as per the organization structure. But here, nobody can say that because you are independent, your reporting line is directly pitched to the board subcommittee. So you can maintain these relationships without compromising the independence of the compliance function. Right? Okay. So the relationships again classified into two segments: internal relationships and external relationships. When you talk about the internal relationships, your relationship with the board of directors, your relationship with your leadership team, the corporate management, the senior management, then your relationship with your line managers, maybe the product lines or the vertical business verticals or it can be the branch regions, the branch network, so the operation line managers. You have to maintain good relationship with the internal auditors. You extremely have to maintain a good relationship with your risk division, risk management, right? And where your bank is a subsidiary, you have to maintain your relationship with the group compliance, right? You have to maintain relationship with your legal. You have to definitely have your relationship with the HR and training, very important. And basically, you have to keep your relationship with all other staff of the organization. Because finally, compliance is the responsibility of whom? Going back to the basics. Compliance is the responsibility of whom?
Board of
Need an
Directors.
answer. Hmm?
Board of Directors.
That's the prime responsibility. The primary responsibility rests with the board of directors. And we
All
decided how
employees
it
of
is
the organization.
all employees of the organization. Compliance is the responsibility of all employees of the organization. Having said that, the board sits on the top and taking the final primary responsibility for doing business in a compliant manner. And we discuss in detail we discuss how the board exercise or rather take that obligation and the responsibility and what is the mechanism and the chemistry available in the organization, how that responsibility is casted down on a top-down approach. Right? By now, I think you got to be very clear on this because we have spent lots of time in discussing this in detail so that you need to know how this textbook said things are connected in the practical scenario. You need to apply this in the practical scenario and realize how compliance function needs to be carried out and how effective it is going to be if these relationships are or if they are maintained in this manner. Right. So, in order to have this relationship, the compliance requirements, I think we discussed the skills, presentation skills, both written and oral, listening skills, analytical skills, all that is important to have this relationship, and the negotiation skills, all that is important to have very cordial, professional relationship with these parties. Right. Externally, it's important that the compliance needs to keep professional and cordial relationship with these external parties, starting from the regulator, then various other peer groups, compliance groups like the Association of Compliance Officers, various other associations, then the industry groups, external auditors, FIU, part of the regulator, right? And also police and the law enforcement agencies, right? So these are basically the important relationships that you need to maintain with external parties. So internally, relationship with control functions, the following common parties with whom CEO should liaise with on a proactive basis, right? In maintaining those relationships, you need to liaise with these parties on a proactive basis, underline the word, proactive basis. You need to liaise with CEO, not to run to him after something happens, right? You need to liaise with him on a proactive basis and set the tone from the top. And if you see that there are problematic areas where there are high risk areas, example, the little example that you have taken now, the SRR example, right? If you see that the internal processes are weak, it's a subject matter or the risk is so high that you need to keep the CEO informed proactively. right? You don't run to CEO without telling the CFO because or the head of treasury who is in charge of that. While saying him, right, it's not a complaint, but you need to keep these parties informed, well informed proactively, so that there won't be any surprises. Remember this. There shouldn't be any surprises within the organization if it is well managed, right? All things need to be proactively looked at in the longer horizons, then you know that it's going to come, right? Now the Met department will forecast and say there are going to be a thunder showers and storms and the typhoons and hurricanes and all that probably the next week. Or there's a some cyclone is developing, which is going to hit the country in a day or two. So proactively you are seeing it. Likewise, the compliance also need to see. The very example we have taken, you know that your capital adequacy is just hitting the brim now. We are almost on the fence, right? The more you lend, you might have issues. The more your NPs go up and impairments rise, you will have an issue. The more you got to go and lend into a different segment, right? With probably with less security or no security. It can be the policy. You might have issues. So you need to liaise with these parties well before the thing occurs or the situation occurs. So proactively you need to keep your relationship with COMD. Risk management, very important. You need to have a very close relationship with the risk management. The three lines of defenses, risk, compliance and audit. Whether it's the second line or the third line makes no difference, right? That's my personal version I said, but it's a different, definitely a line of defense, second and third. So you have to have a very cordial understanding relationship with these functions. When you are discussing the governance, you will understand it better. CFO, Chief Financial Officer, very important. Because most of your FIU or other central bank reports are generated through the CFO, right? Your P&L, the balance sheet, right? The treasury balances, your NOP from treasury and CFO, right? Net open position these days, your reserves, right? Your investment portfolios, right? How much is kept on the held to maturity, right? Available for sale. Your different investment portfolios, right? All this needs to be reported and needs to be closely monitored. Internal auditors, the key audit matters, CAM. What are the key audit matters highlighted by the external? What are the audit matters highlighted by the management letter by the external auditors? The central bank supervision. All this information needs to be shared with risk, or rather compliance, and you have to have this relationship very well maintained and established. Exposure and the credit management. You need to know what the exposure is, single exposure, single customer exposure, group exposure. These are compliance requirements. Your credit policy or your risk policy will tell how much you can expose yourself in a particular segment or a category or in credit. Your risk appetite statement. The bank will have a risk appetite statement, board approved risk appetite statement, which will tell the level of risk you are going to take in every line. And it will say, okay, single borrower, this is our limit. Group exposure, this is our limit. You don't go beyond that because you know it's a risk. Single customer, single exposure. You are not going to lend beyond that amount to any single customer, single entity. Because if they fail, that will affect the bank. So you are limiting it. You are bringing ceilings, caps, amount that you can lend to a particular group. There's a cap. The bank risk document will tell you, risk appetite document will tell you. This is the maximum you can go and expose yourself for this group, right? So I think there's a report going on the large exposure, single borrower exposure. Compliance is go through the compliance. So compliance need to know this, right? And the credit, okay, what are the segments to which you are exposed? Is it the corporate, SME, MSME, micro? We need to know under each different types of credit. What is our exposure? What does the bank specify and say? What's the maximum limit you can go up? What's your exposure on agri? Are we meeting the regular requirement? Are we well above it? If that is the case, probably we may not be lending, taking the risk-based approach. We may be just lending to one particular sector, right? Geographical exposure, region-based exposures, right? Then probably you will do, risk will carry out various stress testing on your liquidity, on your profitability, on your NPs, on your loan book. So compliance also need to know these things, right? And the new product development, I told you, is very important. Compliance will have to get involved in the process right at the beginning, from the commencement, for a very simple and obvious reasons that any changes or drastic changes can be avoided, which the compliance may want to have when the product is set and to be put out to the market. The compliance, because without compliance clearance, they can't go out to the market. So everything is defined and designed and brochures printed, media campaigns all aligned, and just to put it out. Sometimes this happens and they think, okay, compliance clearance is just a rubber stamp you are going to endorse, and no, you cannot do that. So therefore, have your compliance program and then influence the decision makers to get compliance as a party that would get involved in any product development right from the initial time, from the commencement of the development of the product. You need to be party to that. Then whatever the things that they discuss, okay, you are also aware, you are telling to and guiding them to define or rather develop the product in such a way that there aren't any regulatory breaches in the product. Right? So the product development, then the data protection, extremely important. To what extent your data is protected by the bank? When you say your data, I'm talking about the bank data. How is your cyber security? Especially in this today's environment. We are working from home, right? WFH, work from home concept. When you work from home, okay, your system access is given, right? Whether the right controls are there. When the system access is given to your officers to work from home, or is it just being given where the data security is highly threatened? How effectively we are using our VPN, right? Then how effectively we have our internal controls, right? Or is it device specific, or can they log into your system by using the normal internet and a Gmail and all that? So these controls need to be there, right? How effectively you are carrying out your internal, external vulnerability assessments. All that is part of compliance if they are to manage the compliance function in an effective manner. So external relationship is we discussed with FIU and all that. I wonder which slide that got duplicated. Yeah. Then further, compliance will have to play a very important role in the disaster recovery and the BCP, business continuity planning, together with risk and the CIO. Right? Risk plays an important role in the BCP, while the business also plays the frontline role in the BCP. Putting the BCP, business continuity plan, and testing these things enterprise-wide. All these are the functions having a BCP policy, right? So this is a big task, right? So the compliance will have to be party to in these processes right from the beginning. These are things that cannot be done overnight. There are lots of time, effort, planning, resources needs to go into this. Right? As per the ISSP guidelines, you need to have the DR site, which is equivalent to the size of your normal running operating computer. You have to have a DR, disaster recovery site, with the similar capacity, with the similar functions, right? So compliance has to look very closely, get involved in these functions, along with risk, to see how compliant are we on the ISSP regulations. Do we have our DR site, which is capable enough to take on the entire operations in case of a failure of our the system, running system, main server, right? So whether we have done our BCP drills properly, whether we have the BCP policy, we have the various committees coming under the BCP in action, right? Whether the BCP management is taking place, whether there's a BCP, business continuity plan for every business vertical, enterprise-wise, system support, all that. And whether you have the disaster recovery operational center in case if your main office is in threat or people can't access it, right? So there's a huge functionality involved in this process under BCP management. So compliance will have to maintain very effective relationship with these parties who are involved in the DR and the BCP management. That is basically with risk, internal audit, and IT. Then internal audit in specific. You have to have a very close relationship with the internal audit. You need to get the support from the internal audit, get information from the audit report. The only department which can carry out a check on internal audit is compliance. Other departments can, audit can go and audit everybody, including risk. But the only department that can go and check on the audit department is compliance. Compliance need to carry out its compliance check on the audit department. If you remember what I discussed, compliance need to make sure that the audit functions properly, having its due independence, and whether their audit program for the annual audit program is well prepared, well defined, well drafted, well articulated, taking the various audit requirements under the audit policy into thing, including the regulatory requirements to cover the very important departments, processes, right? So the compliance has to have that relationship with internal audit. It shouldn't be hostile one, right? So that's where your expertise will come and play a major role. Because nobody would want, I mean, sometimes they might have that the mentality and the thinking that, I mean, we are auditing everybody. I mean, who can come and audit us? No. It's a, a two-way thing, where the compliance need to go and check audit, like any other department need to go and come and check whether the compliance is doing its job. This is important as per the governance requirements, because that's why those are called the defense lines. So there can't be any errors or shortcomings or the lapses or loopholes in the defense lines. It's like a war. We are covering ourselves now in a battle, right? You have the first line of defense, second line of defense, the third line of defense. If an enemy to attack you, you've got to come and make a breakthrough through all these defense lines and come and attack the point. Same thing here. Financial organization is well protected through this very well articulated defense lines, primary, secondary, and tertiary. First line of defense, second line of defense, and third line of defense, right? And also the compliance needs to keep a very good relationship with legal. Very important. Very important. Right? So the compliance can always seek advice from legal. If they need advice. And if you go through the compliance policy, you will see generally the BRMC as well as the compliance can seek expert advice if they really require. It is provided in the policy itself. So you need to have a close relationship with the company secretary. That's very important when you are ensuring that the governance requirements are met in terms of the board meetings, the board subcommittees, the composition of the subcommittees, appointment and retirement of directors, carrying out induction programs for the directors, right? So there are so many areas where compliance will have to work with the internal parties, the internal relationship, and finally the HR division, which is known as per the modern management styles. HR is supposed to be the hub of the organization. That's what the modern textbooks say. It's the hub of the organization is HR. Because we are now looking at the human capital. The important most asset for any organization is not the fixed assets, even the loan book, no. It's the human capital. If you manage your human capital properly and if you have rich human capital, I mean, the wonders you may do. If that's falling short, very little you can do. So the HR is the hub where everything in the organization is aligned with HR strategy and the HR policy. Or put it the other way around, HR needs to cater to the requirement of the organization. So it's the main cog, right, which provides movement for all other small wheels in the machinery, right? So HR policy has to be aligned with the strategy policy of the company. HR policy needs to be aligned with the compliance policy of the company. HR policy needs to be aligned with the risk policy of the company. HR policy needs to be aligned with the BCP policy of the company. Likewise, the macro level, right? So they are sitting in the middle as per the new, the management theory, right? So compliance obviously have to maintain a very good relationship with HR as well, especially on training matters, right? So, okay, I think it's time up. We'll wind up for today. I would like to take up any questions or clarifications you have on this up to now. Any clarifications? Have you all understood what we have been discussing? No answer?
Mr. Vijayaratna,
Yes.
Mano here, Mr. Vijayaratna,
Yes, Manu.
conflict of interest, now from compliance point of view, we have to look in the related party transaction or any other area. Normally we check related party transactions, but
Yeah.
is there any other we have to put it in our focus?
Yeah, your related party transactions are the main area where it will come in the radar of compliance. But in addition to that, now if there's a example, now you are going into the governance requirement, MD, CEO, and the chairman can't be one person because the two different roles. I just took an example. Two different roles, two different responsibilities, the policy level, right? So there had been certain companies sometime back, even banks, where the chairman and the managing director or the CEO were the same. The conflict of interest there, right? I just took a very obvious example. So it can't happen. So then the compliance has to intervene and show them this is wrong. This is a violation of the governance regulation, conflict of interest, right? So if the the audit officer or rather the procurement officer, right, is not sitting in the procurement committee, right? Generally, the procurement committee is headed by a non-executive director of the company. I'm just taking the macro level example, right? So then if that position is to be held by an executive director of the company or the bank, then there's a conflict of interest. Got it? So when you
Yes.
see that type of things, not only related parties, what you see day in, day out, yes, but it not confined only to that. Anyway, any place where conflict interest chips in to the process, compliance will have to intervene and show it and put it right. Right? Now, the chairman cannot be a member of the risk committee. Right? Correct? So if that is the case, then there's a problem. There can be conflict of interest. Right? The managing director obviously cannot be the head of the chairman of the risk committee. Conflict of interest. Understand? So wherever that type of situation chips in or crops up, compliance will have to point it out because you are supposed to know the regulation. You are supposed to know the international best practice. You are supposed to know the policy requirements of the company, bank. Then you need to point that out and say this is wrong. Then put this right. Have I answered your question, Manu? It's not confined to related party, but related party is the commonly, involved processes, and then the issues comes up through that. But it's not necessarily confined to it. It applies across the entire operation. Have I answered your question now?
Yeah, yes. Another question was now this say corporate governance, the document issued by the central bank, does it cover the areas we have to look into from the conflict of interest angle?
Now,
The
conflict of
direction
interest,
is there?
yes, it
Is there any,
carries. No, it doesn't.
but
It
there's no
doesn't
one
clear.
document, no?
No. There's no document like that. That's what I say. You've got to be a jack of all trades. to put these requirements together in meeting the conceptual requirement, right? So there are no document to say that you. I mean, there can be a direction issued in time to come if the regulator feels okay. There needs to be a new direction issued on this because the violations are so high and the risk can be so high. It doesn't mean that you got to wait for a direction to go and comply with the regulatory requirements, which are of common nature. So you need to understand the concepts, no? So the conflict of interest is one concept that you need to have in your mind, which needs to be avoided at every point, at any cost. So you don't have to wait for a direction to come and emphasize and then make it compulsory. But wherever you see this concept needs to go in, segregation of duties. Now there are no regulation to say segregation of duties to be to be complied with. You have to, because that's the international best practice and the time tested procedures and how you ensure avoidance of foul play. But if there's segregation of duties concept, which is an accepted rather a norm or a concept towards good governance and sustainability of business, if it is violated, you don't have to wait till a direction comes and points that out. To point it out, to bring it on table for discussion towards resolution. Now, for instance, that's now say there are certain banks I know, the password administration is done by IT, which is conceptually wrong. Segregation of duties is grossly compromised, right? So, but there's no direction to say that it is wrong, no. Audit may point that out under segregation of duties, it is not there. So the main person, the people who can spot these things out, is you don't have to wait for audit report if you see that happening. You can bring that out and say segregation of duties is compromised here, because if the password admin is done by IT, who are the people who basically have the operating system, access to everything and all that, I mean, they can do anything and everything. There's no control, right? You got my point?
Yes, fine.
Right. So any place you see this type of risk arising or best practices are violated, compliance can chip in and then point that out. Of course, at least they can bring it to the notice of the internal audit and say, okay, why not you look into this and give us a feedback which can have more authenticity. You can always highlight it as a compliance risk if this type of things are happening. That shouldn't be a kind of a surprising report to them, but you can definitely discuss these things in the executive risk committee, in the internal forums, and say, you may raise your concern. How is that this is happening? This is wrong. Right? It has to be held by an independent party, because they only will then, when authorized to create passwords, the user profiles, attaching various functions which is necessary to carry out that function of that particular person who holds that job profile. Then you have certain, the user profiles created with high level functionalities, super passwords, right? So why a super password should be given to a particular person? Then the independent password admin will decide whether this password needs to be given to this person. Privilege access. So the segregation of duty the concept will chip in there. Right? So compliance, that's what I say. In my view, compliance is finally the third line of defense. You can just, see everything from eagle eye. Any other questions? Mano, have I answered your question now?
Yes. Yeah, boss. Okay, fine. Thanks.
Right. So, in the absence of any other questions, we will wind up for today, and probably we will get another handout. I think we have come to almost enough this handout. We said we had 31 slides, is it? You all got the handout up to 31. I think we could have finished those two also. Anyway, that doesn't matter. We will finish up those two and then move on with the new handout that we shared with you probably over the weekend. Right. Okay. Thank you very much. So we'll meet up again next Sunday.